More importance is given to risk-based bank audit, with more guidance and circulars from RBI for regulating the banking business. In the country, banks management is focused as being about a robust framework which will identify, assess, manage the financial risk. In order to achieve this target, internal audit of bank is necessary. We have on panel today CA Arkesh Vyas sir, CA Lokesh Gupta sir, and CA Premnath D sir. Welcome all of you, sir. I request CA Pallavi Jha ma'am, Secretary Patna branch, for opening remarks. Over to you, ma'am.
Thank you, ma'am. A very great good evening to everyone. This is CA Pallavi Jha, Secretary Patna branch, ICAI. For this current webinar on the topic of building an effective internal control in banking industry, we are very thankful to the Internal Audit Standards Board ICAI, Chairman CA Charanjit Singh Nanda sir, and Vice Chairman CA Gyanchand Mishra sir for providing Patna branch to conduct this current webinar. We have eminent faculties with us having august experience in the field of bank audit. CA Akesh Vyas sir, we have CA Lokesh Gupta sir and CA Premnath D sir taking various sessions on the current scenarios and the current areas needed to be taken, looked upon in the banking sector these days. As we know that banking is the economy, is the backbone of economy, and to have a proper internal control is imperative to run the economy in a proper manner. With the coming up of digital money, digital currency, and digitization, a number of innovative fraud mechanisms have come up, and thereby highlighting a number of lacunae in the system. In order to have a proper understanding and in order to understand the various areas to mitigate these frauds, it is very important to have a proper internal control in the banking system as well. Not taking much of your time, I would request CA Deeksha ma'am to kindly take up the event forward and start with the sessions. Ma'am.
Thank you, ma'am. May I request CA Charanjit Singh Nanda sir, Central Council Member, ICI and Chairman of IASB of ICI. He was the member of Quality Review Board set up by the Government of India. He was the Chairman of Committee of Internal Audit of ICI, Women Empowerment Committee of ICI, Vice Chairman of Committee on Public Finance and Government Accounting, and several others. I request you, sir, for a formal welcome address to our members and the panel. Over to you, sir.
Thanks a lot, Diksha ji, the Secretary of Patna branch, CA Pallavi Jha. Two of the very revered speakers, my very old friend, CA Akesh Vyas ji, Mr. Premnath Degala ji, and the coordinator of today's session, CA Diksha Kedia Kejriwal madam, Shivani Nigam, Surbhi Tyagi, technical support, Ayaz Khan, and all who have come here to go home more enlightened. Ladies and gentlemen, we are back yet with another exciting session on building an effective internal audit banking industry. Your board is very keen to bring in NIOR's webinars for your kind service. And I want to tell you very candidly that our profession will only go up when we hone our technical skills on a continuous basis. There's a couplet which will not be out of the way if I speak here. The couplet says, "Agar khairat mein milti kamyabi to har shakhs kamyab hota hai. Agar khairat mein milti kamyabi to har shakhs kamyab hota. फिर कदर ना होती किसी हुनर की और ना ही कोई शख्स लाजवाब होता है." अगर आप लाजवाब बनना चाहते हैं तो आपकी मेहनत, मशक्कत और आपकी टेक्निकल स्किल्स को आप कैसे देखते हैं, that will make a difference. Today, when we speak about the banking industry, you are aware that the banking industry is special as it involves dealing of public money. Yes, the banking industry has thrown number of opportunities for chartered accountants, not only in terms of employment, but in terms of audit, made be internal audit, made be concurrent audit or statutory audit. And the dynamic environment in which this industry operates requires the members to not only use their existing skill sets to the best of their ability, but also the same sharpness all time to effectively turn those challenges into opportunities and take note of newer circulars or newer information which is coming in it. You are aware that the very nature of banking business is dealing with public money, and therefore proper checks and balances in place are required to ensure that we give our best. The internal audit function in a bank assists the senior management of the bank in providing an objective assurance that all the controls are well designed and effectively operated. You see, where the control environment becomes weak, it is a breeding ground for frauds. Frauds start coming. And as concurrent auditors, we are there to go ahead and identify the early signs of frauds. The bank's internal audit reports are the primary source of information about the effectiveness of the bank management, of the bank's risk management and internal control system in the bank. Now, what is the audit process in banks? To very briefly put it starts with substantive and compliance testing. Thereafter, it goes on a continuous verification of transactions as well as the control environment that exists, verification of system generated reports, generation of special purpose reports based on exceptions, logics, and through the use of SQLs. Going ahead, collection of data from CBS to verify numbered and transaction of the nature of transactions processed during a period. There are specific audit tools which are used for computerized audit of banks, which are CATs, computerized assisted audit techniques, spreadsheets, query languages with SQL. So largely, if you want to go and get involved into internal audit or control or concurrent audit of banks, the course which you are attending, the course which you intend to attend from the board on concurrent audit will be very much helpful. And keeping this in view, we have requested Shri A.K.S. Vyasji, Mr. Premnath, and Mr. Gupta to come and enlighten you on this subject. I will not speak much because we have this very star faculties ready to come and speak. So I want to thank you all for giving me an opportunity. And again, want to reiterate that the board is always there at your beck and call. Whenever you need the board, any specific point you want to be discussed, we are always there. And I'm reminded of a couplet at the end also. The couplet says, जब भी जी चाहे बुला लेना मुझे मेहरमा, जब भी जी चाहे बुला लेना मुझे मेहरमा, मैं गया वक्त नहीं जो लौट के ना आऊंगा. Whenever you want the board, myself, vice chairman, secretary, all officers of the board, they are ready to move immediately on your calls. So whenever you need anything, my numbers, my email ID can always be taken from ica.org after putting the name. Thank you. Thanks for giving me patient hearing. Over to Madam Diksha for further proceedings. Madam, the dice is all yours now.
Thank you so much, sir. Before starting our sessions, I want to give just brief introduction of our speaker, CA Akesh Vyas, sir. He is practicing chartered accountant based in Delhi. He qualified CA in 1986 and his core area of practice is bank audit. He is a faculty of certified courses on concurrent audit of banks of ICI. Heartiest welcome to you, sir. So I request you to share your insights on today's topic.
व्यास जी आपको अनम्यूट करना पड़ेगा साहब.
Sir, you are mute.
Thank you, sir, for reminding me. Quite often we forget this, unmuting ourselves. And thank you very much, everyone who is attending this. And thank you, special thanks to Nandaji and IESB for giving me an opportunity for coming and joining this webinar, along with Lokeshji, who's an expert in Forex, and Premnathji, who's expert in CBS. So whatever I have come across during my course as a concurrent or statutory auditor, or sometimes forensic auditor. My topic today is NPA, which is a pretty interesting subject as such. So I would just like to share my PPT also. As a matter of fact, we can say that somehow we have improved as far as NPA performance is concerned. Because say in 2018, it was around 14% of total advances. Right now, the latest figure have come and that is 5.92. So we can say, yes, we have made some improvements, but as a country, as a bankers or as chartered accountants, we cannot be simply content with this figure, that's 5.92, because lots of accounts have been restructured during the last few years. Some recoveries have been made in IBC and all that, but still banks are on crossroad because they are on the spree of enhancing their credit portfolio, and sometimes we are coming across kind of quality of advances which is not up to the mark as such. So why the NPA is important from auditor's point of view or from country or from any other angle? Because whenever there are certain agencies who are giving rating to the country, according to which their cost of borrowing and investments depend. Right now, we are just above the investment level. There are investment grades and non-investment grade countries also. We are just above the investment grade. We are not very high position asset, because there are two reasons for that. One is we have very high government debts as compared to GDP. And secondly, we have very high NPA ratios as such. So what happens in case there is a downgrading or the country is graded at a lower end of the investment grade, that increases the cost of borrowing, that increases the cost of investment for the country as such. And definitely NPAs do have adverse effect on the economy as a whole. Because say government has invested heavily in the banks as such. The government needs dividend from them and other kind of appreciations and all that. Because of high NPA, especially in the last few years, we have seen that few of the banks, they have been categorized into PCA category, that is preventive from corrective action, which prohibits the bank from further lending, enhancements of business, opening new branches and all that. So that really restrains the banking. But right now, thankfully, because of recoveries and all that, and some prudent policies, the NPAs have come down, and right now I think all the banks are out of this PCA. Lastly, it was IDBI, which has also been taken out. So right now they are on the verge of enhancing the credit portfolio as such. But we have to, as an auditor, we have to be careful, because in few cases, what we are seeing during the audit, that the due diligence which is required to be made by the branches as such, perhaps they are overlooking, and that we'll discuss later on. What are the key points as far as NPAs are concerned? As far as auditors are concerned, we have to look at the guidelines which are given in the Reserve Bank of India Master Circular 1st July 2015, that is called direct norms. It has been updated on 1st October with certain changes also, but more or less the guidelines have remained the same. Some key points are that one account is NPA. Well, all the accounts of a borrower will be NPA except one account, which is covered under, which is against deposit or LIC or certain other securities. If the value of that FDR is more than the outstanding, in that case, that account will not become NPA. Otherwise, all the accounts of the same borrower across the same bank will become NPA. So this is one thing. But there is one exemption. If an account has been guaranteed by central government, mind you, this exemption is not available for state governments guaranteed accounts. But if it is central government guaranteed account, that account will not become NPA as such. And once on 1st July 2015, when the circular came, it said that if there is any restructuring done in any account, which is the account will have to be classified as NPA, but because of GST disruptions, changes, and COVID and all that, every year we are finding certain circulars regarding restructuring, which are giving exemptions, but that restructuring has to be as per the RBI guidelines. If that restructuring is not done as per the RBI guideline, then as an auditor, we have to identify those accounts and classify those accounts as NPS. One more thing is that this restructuring is only one time. And once an account has been restructured once, it cannot be restructured again. Last year, when we were doing the statutory audit of one of the branches of a public sector bank, we were able to find out one account which was having an exposure of around 150 lakh rupees. With that account had already been restructured earlier also. So once they are doing it, they are doing the restructuring again in the current year also. This is absolutely against the RBI guideline, and as such, the account has to be classified as NPA. So these are certain points that we have to look into consideration. NPA itself is a very vast subject, but as such, we have been allotted 45 minutes. There are time constraints, so we'll be taking a few things that as an auditor we have to look into. why this NPA is dreaded in the banking sector. Why is it so important? Why the statutory auditors are giving more preference as compared to concurrent auditors? Because the statutory auditors have the authority to classify an account as NPA, which unlike for concurrent auditors, this authority is not available. So why the bankers fear this NPA word? Because they are accountable for account which is becoming. There is a staff accountability which is being done by the banks whenever an account becomes NPA, simply because NPA hits the bottom line of the bank straight away. If an account is classified as NPA, it has three consequences. First is this account will cease to generate income for the bank as per the RBI guidelines. That means unless and until this account is upgraded, no further interest on service charges will be debited in this account. This account will not earn anything to the bank as such once an account becomes NPA. Secondly, they have to make certain provisions. Again, this is hitting the profit of the banks. Provisioning will depend upon whether it is standard, substandard, doubtful, whether it is secured, unsecured, and all that. So that affects the bank's profitability as such. And then if there are any unrealized interest, service charges, and all that, that will have to be reversed. So these are three things which straight away hit the bank's bottom line as such. And as such, NPA is not, it's a very dreaded word in the banking sector as such. And looking further, there may be, if we'll go deeper into those accounts, perhaps kind of frauds may also be, element of frauds may also be there as such. So NPA is one thing, fraud is another thing, which Lokeshji will be taking up later on. But possibly there may be a few cases where the accounts are not just NPA, but there are frauds also. So these are things that we have to take into consideration. Plus, why it is important for the auditors to, especially the statutory auditors, to ensure that all the accounts which are NPA, they are properly classified as NPA, because there are numerous ways in which the bankers try to evade, try to keep that account standard, though it is as substandard account. So there, the skills of the auditors lie. How they're going to go deeper into that account and just check up whether that classification is proper or not. Because if an account which is NPA is not properly classified, it has three consequences. First of all, it will affect the true and fair view of the financial statements of the branch as such, which we are certifying. Secondly, unless an account is classified as NPA, it cannot be, no action can be taken under SARFAESI. This SARFAESI is a very important one. There are certain provisions. One of them is that the account has to be classified as NPA. Only once an account is classified as NPA, only then the bankers can proceed further. They can issue notice under Section 13(2) of the SARFAESI Act. So this recovery proceedings cannot be taken unless an account is classified as NPA. And thirdly, Income Tax Act is also giving certain exemptions. In normal cases, even if we are not recovering any, if you are earning certain interest as a private individual, you will have to pay the tax on that, in spite of the fact that the interest is not actually realized. But in case of banks, there are certain exemptions in the Act, which says that in case of unrealized interest, they will not have to pay the income tax. So if the account is not properly classified as NPA, the bank will be earning interest on that. That will be only bookish, and they will be paying income tax also on that. So there are three major consequences if an account is not properly classified as NPA. There are two ways the accounts are classified. One is standard, another is NPA. So whenever an account is open, it can never be an NPA account. This can never happen. If a new loan is given, it will always be a standard account. But over a period of time, according to the performance of that account, this account may slip into NPA. All the accounts, even the standard accounts, are being classified into two categories. One is a standard regular, another is special mention account. The main purpose of the second classification is that the account straight away does not slip into NPA. If an account is classified as SMA, that is a special mention account, that will give sufficient time to the bankers, the branch officials, to pursue the borrower and ensure that whatever the irregularities are there, they are being removed and the account remains standard. Otherwise, if this second classification is not done, it may happen that the account may all of a sudden one day slips into NPA category. So there are just three categories also as far as special mention accounts are concerned. One is SMA 0, another is SMA 1, and third is on the overdue condition. So if it is overdue between 1 to 30 days, it will be SMA 0 for term loans. For CC account, there are no SMA zeros. They will start from SMA 1. If it is overdue between 31 to 60 days, as far as term loans are concerned, that will be SMA 1. If the CC account is overdrawn above sanction limit or DP, it will be classified as SMA 1. If the overdrawing is between 31 to 60 days, and if it is 61 to 90 days, the account will be classified as SMA 2. And this SMA 2 is very dangerous because thereafter the account will slip into NPA. And then in NPA, there are three categories. One is substandard, doubtful, and loss as such. So as far as substandard are concerned, they are the first year of NPA. Second one is doubtful, which is more than 1 year. There are three categories into this. First is first year of doubtful, then 1 to 3 years, that is D2, and over 3 years, this is D3. And this is being done, classification is done to ensure that the provisioning is done according to the age-wise subclassification or doubtful. And then loss. There is no such period for considering an account as a loss asset. An account may be standard, the performance may be proper or whatever it is, but there may be certain reasons like erosion in the value of assets, or there may be certain other reasons for the statutory auditors to consider an account as loss, where they think that there is a threat of recovery, there is a great erosion in the value of assets. Well, in that case, they can straight away classify an account as loss in spite of all parameters which are as per the standard account. So this is one case where the auditors are authorized to classify any account from standard to doubtful or loss, depending upon the. One more important thing is that erosion in the value of assets. If it is between 50 to 90%, the account will be classified as doubtful. And if it is more than 90%, the account will have to be classified as a loss asset. So these are certain things. Here, the security value counts. Otherwise, it depends upon the performance. If the term loan installments are coming properly, CC account is running properly, the account will not be considered as doubtful loss. But in spite of all that, if there is an erosion in the value of assets, and the erosion in the value of assets is between 50 to 90%, it will be doubtful. If it is more than 90%, it will be loss asset. So these are certain things that we have to take into consideration. Then we have to make certain provisions also. Like I said earlier, that if an account is being classified as NPA, certain provisions have to be made. If it is a standard account, even in that case, some kind of provision is being made, like it's a very nominal one. But if the account becomes substandard, it will have to be classified into two categories. Even otherwise, all the accounts are being classified into two categories. One is secured, unsecured. As far as security value is concerned, and the account is a standard, it will not affect anything. There will not be any effect on the provisioning. But if it is substandard account, and if it is an unsecured account, the provisioning will be 25% of the unsecured portion and 15% of the secured portion. But if it becomes doubtful, that is over 1 year of being an NP account, and if it slips into doubtful, now the provisioning will be higher. If it is an unsecured portion, if it is an unsecured loan, it will be 100% provisioning. But if it is secured one, then provisioning will be according to the year. First year will be 25%, 1 to 3%, 3 years 40%, and over 3 years 100%. So that's why security is very important as far as banks are concerned. And one more case is fraud. An account may not be NPA, but there is a fraud. The account has been declared as a fraud in spite of everything being otherwise okay. In that case, the account will have to be considered as NPA and 100% provision has to be made, irrespective of the fact that there may be security, there may be proper repayments and everything. The account will have to be considered as fraud as such. Now we are talking about security because we said that there are two elements. One is secure, another is unsecured. Unsecured, if it is doubtful, 100% provision has to be made. But how do we ascertain security? Because every loan, barring few loans like personal loans, clean loans, pension loans, these are unsecured. But there are certain loans, most of the loans, they are backed by some security. Even Mudra loan, even PM Swanidhi loans, which are of very small amount, 10,000 or 20,000, depending upon the performance of that borrower. These accounts are secured. Because there are two kinds of security. One is primary, and another is collateral. Whatever amount you are lending, That is again the security that will be considered as secured account. If it is clean, like personal loan, pension loans, like I said, it will be unsecured. Now, how do you define this security? RBI clearly says that an account will be considered as fully secured if the value secured is more than the outstanding at a given date. It may be balance sheet date or in between. The account will be considered as fully secured. And for considering this value of security, you will have to take into consideration the aggregate value of primary as well as collateral security. There are two kinds of securities. One is primary, against which the loan has been given. And there is one which is called collateral security, which is a backup security. For example, we are talking about cash credit accounts. In this case, the stocks and book debts will be the primary security. And there may be collateral security in form of, say, mortgage of immovable property. So if we take the aggregate of both these and the outstanding, we check up. If it is more than the outstanding, definitely the account will be considered as fully secured. What about guarantees? They will not be taken into account. Guarantees are not to be taken. No intangible security has to be taken as per the guidelines. But there are certain exemptions, like if an account is being guaranteed by central government or state government, then the value of the guarantee which has been given in this account, that will be taken into consideration for classifying that account as secured. These accounts which are backed by the guarantee of central or state government, these will be considered as secured accounts. And we're talking about security. When we're talking about collateral security, collateral is very important because this is part of one of the 4C, which are of utmost importance when the bankers are lending. One is capacity, one other is character, capital, and collateral. The bankers are talking about these 4C, and these are very important. Collateral is absolutely important. So security has to be perfect. In one of the cases that we have seen, so big willful defaulter, Vijay Mallya and Kingfisher, where what was the security, which was the main security in this account? It was the trademark of Kingfisher. As per RBI guidelines, no intangible security had to be accepted by the banks, neither goodwill nor trademark nor this any other one. But here in this case, the goodwill, this trademark of Kingfisher was accepted as collateral. It was valued at 3,406 crore by one of the very reputed CA concern, with a disclaimer that this valuation is only for internal purposes and not for investment purposes. But in spite of all those disclaimers and all that guidelines, this collateral was accepted by the banks as such. And ultimately, when this trademark was put in auction and bidders were invited at just 10% of the original value, not a single bidder came, because by that time, trademark was not having any kind of real value as such. So as such, security has to be proper as such. Now we are talking about one more thing that is also very important is there are certain projects which are being housing projects by the builders where the properties are under construction. So as such, if the accounts are standard, everything is okay. Though normally what the bankers do is that they keep that account, they classify those accounts as fully secured, and there may be different opinions by different. Personally, I say that there are no security as such, because the security means tangible security, and the flats have not been constructed as such. But if the account is a standard and everything is proper, builder is not a defaulter as such, there is no problem. Even if they're classified as secured, that is no problem. But last year, when we were doing the statutory audit of one of the branch of a public sector bank, we found out that certain accounts, and they were quite huge amounts, like 4-5 crore rupees, 3-4 accounts, where the banks had financed to individual home buyers. The builders, there were no construction activities going on for the last 4 or 5 years. The company was referred to for insolvency under IBC. The builders were behind the bar as such. So what the bank said, that they had classified those accounts as fully secured. There was no reason, because these flats are not likely to be constructed as such. There was no security available with the bank as such. So these accounts had to be classified as unsecured, and accordingly the provision had to be modified. So we gave an MOC of around 1.50 crore for that. So this is the way we can look into all these subjects and all that. more important things that come into picture is ROC charge filing and CERSAI. These two have become very important as such, because everybody knows as professional that whenever a loan is given to a company, or whenever a company has given a guarantee to any other company or individual and they have charged their assets in favor of the financial institutions, Section 77 comes into picture, Section 77 of the Companies Act. And according to that, ROC charge has to be filed within 30 days. It's a bit different from Section 125, which was earlier in the Companies Act. There they had given us given an exemption of pledge. If any asset was pledged, there was no requirement of filing ROC charge. But right now, exemption has been done away with. Every asset, whether it is tangible, intangible, mobile, immobile, whether in India or abroad, whenever this asset has been charged to a financial institution against which loan has been given, ROC charge has to be filed as such. So sometimes the question comes that if a bank has not filed ROC charge, what will happen? Whether that account has to be classified as unsecured? No, sir. If the company is a running concern, going concern, even if a bank or the borrower, they have not filed ROC charge, it will not affect the security of that bank asset, because they are having security. They can file, they can move DRT, they can realize, they can issue a SURFACE notice, and they can attach those properties and sell them as such. Their rights are not withdrawn. But the things will become quite different. When a company's case is referred to IBC, no resolution, no investor comes, and thereafter this company is resolved to be liquidated. So in case liquidation proceedings happen, in that case, there is a waterfall mechanism in IBC, according to which those financial creditors which have failed to file ROC charge, they will be classified as unsecured financial creditor. And in waterfall mechanism, they will be classified at number 4. First will be IP cost, then secured financial creditors, workmen dues, employees dues, and thereafter they'll be coming at number 4. So there'll be big implications. So ROC charge has to be filed. Second is CERSAI. CERSAI is just like ROC, with the only difference is that CERSAI is applicable for all the individual partnership firms, all entities, even private limited companies, though ROC is applicable only in case of companies as such. So CERSAI is mandatory. This CERSAI is a Section 8 company registered under the Companies Act 2013, where central government has certain investments, certain financial institutions have. And the main purpose again, CERSAI and ROC is the same, that it's a public domain. Whenever a person is dealing with a bank or a company or any person, they know that the same assets have been charged earlier to some bank. This came into effect on 31st March 2011. Earlier, it was only immovable property. Certain amendments have been made in 2018, December, which requires that even those properties which are under construction, the banks of finance, CERSAI has to be registered. Right now, there is just one exemption, and that is vehicles. Whenever a vehicle loan is given, their CERSAI has not to be registered as such. What are the implications if CERSAI is not registered? There are two grave implications which have come into effect with effect from 24 January 2020. Certain amendments have been made in the Act, which says that first, a bank cannot enforce the right under SURFACE Act if the CERSAI charge have not been registered as such. So this is something which is very important. CERSAI has to be registered. And secondly, if some other financial institution gives finance on the same assets and gets its charge registered, in that case, they will have the priority over the assets. And the second priority will be for the bank which has failed to get the CERSAI charge registered asset. So these are certain amendments. As such, as an auditor, we have to see what is the status of the account, and accordingly, we have to classify those accounts. Now, there are different norms for NPA, for CC, OD, and all that. As far as CC and OD are concerned, especially cash credit accounts, there are two limits in a cash credit account. One is sanction limit, another is drawing power. Even if an account sanction limit has not been properly fixed, as an auditor, we will have to accept that because there is a sanction letter which has been accepted by the customer as such. Documents have been executed for that, and that has been fed in the system. So as such, we will not be challenging them. We may write in our reports that sanction limit has not been properly calculated and all that, but Sanction limit will remain constant. It will not be challenged by the auditors, but we will have to look into another aspect, that is drawing power. Because what the RIC norm says that if an account, CC account, continuously remains out of order for 90 days or more over the drawing power or over the sanction limit, the account will have to be classified as NPA. So there may be these things we have to take into consideration, or the total credits during a period is not sufficient to cover the interest. So in that case also, plus renewal is pending. If it is more than 180 days, the account will have to be classified as NPA. And stock statement is pending for more than 180 days, then account will have to be classified. When we are talking about drawing power, this is a very comprehensive subject because RBI has not given any guideline regarding calculation of drawing power. That differs from bank to bank, from party to party. So as such, whenever we are doing, and we normally what happens is that the drawing power is being calculated on the basis of three elements as such. One is a stock statement. It is based on the stock statement submitted by the parties. It is based on the value of the stocks. It is based on the value of the book debts, and it is based on the value of the creditors, which is being furnished in the stock statement. So normally, what happens that stocks drawing power will be calculated according to that DP against the stocks. They will be reduced by the trade payable. Then there will be a margin which is given in the sanction letter that will be reduced, and DP against the stocks will be calculated. Similar will be the case in case of book debts. Not all book debts will be financed. Normally, what happens that according to the TP policy of a bank, according to the need of the borrower, it can be 90 days debtors, 120 days, or sometimes even 180 days. So this is just generally one thing that has to be taken into account, that how the DP is being calculated by a bank before classifying account as NPA or non-NPA. But there may be different cases, like what happens that in case creditors are more than the stocks, the figure is in minus. How you are going to calculate drawing power of this particular account, where you are finding DP against book debts, but your DP against the stock is in negative. Either whether you will be netting those positive with negative, or you will ignore DP against the stock, which is negative, as zero, and will be taking DP against book debts. So that depends upon bank's policy. Every bank has a drawing power policy, which is being approved by their board of directors. We will have to refer that. If it says that drawing with DP against the stocks is a negative, and you have to take it as zero, so in that case, you will ignore that negative figure and you will take up DP against book debts, and that will be 300. But if it says that netting will be done, in that case, DP will be 100. So I say there may be different methods. There may be cases where certain banks are netting off creditors with the debtors. There are certain banks like Bank PNB and all that, where they are allowing DP against book debts up to 90 days, but all the creditors are straight away not reduced from the stocks. If there are creditors and there are debtors also between 90 to 180 days, then in that case, that slot of 90, 180 days will be first utilized for creditors to be set off against this block, and whatever is left, that will be adjusted against the stocks. So you will have to refer. And there may be certain other cases like Bank of India, State Bank, and all that, where they are giving a facility to their borrowers, where they say that a certain extent of creditors, they will have to be ignored while calculating drawing power. And that is given the sanction. For example, the total trade payables are 500, and the sanction says that up to 300 rupees, that will not be taken into consideration for calculation of drawing power. So in that case, you will have to ignore that, and only 200 will be taken. So I said there are different methods of calculation of drawing power, and that is left entirely to the discretion of the board of directors to frame a credit policy, a drawing power policy, and according to that, drawing power and all this has to be calculated as such. Now, as far as term loans are concerned, it's quite simple, because interest or principal, whatever is remaining overdue for more than 90 days, the account will have to be considered as NPA. Now, what is the role of the auditors? We are performing two kinds of role. One is as concurrent auditor, second as a statutory auditor. Here I say concurrent auditors have a greater role, because this account which is being opened or being taken over or whatever is happening, they are there throughout the year, and they are able to recognize the operations in the account and whatever deficiencies are there in that account. And as a concurrent auditors, we are supposed to be, like Nandaji said, we are the part of early warning system. We will have to report these are the early warning systems in the account, which at a later point may slip to NP category. Yes. So that is very important. That's why concurrent auditors have a greater role to play as far as NPs are concerned. But statutory auditors have also a very important part to play, and that is identification of accounts, NP accounts, because we have found number of methods by which the bankers try to cheat the statutory auditors, and that we will discuss later on. How you're going to identify early warning signals? Like I said, concurrent auditors are the part of early warning signals. We have to see these are the early warning systems which may affect the classification of account. Here, one thing is very important, because every loan passes through 3 stages. If proper due diligence is being made in those accounts which have been sanctioned, whether it is a small account, whether it's a big account, these 3 stages will always be there: pre-sanction, documentation and disbursement, post-sanction. And if there is weakness in any of these 3 at the 3 stages, the account is likely to slip into NPA. What are the main things about pre-sanction? First of all, you need to have application. Application should not be blank. Recently, we have come across a few cases. I mean, there's a branch which we have started recently, and we found out that out of 25 crore, 20 crore rupees are NPA. And quite a number of accounts have been classified as a fraud, and FIRs have been lodged, and things are pretty messy in this branch. Simply because clean loans were financed to lower level employees of government department. What they were doing, they were obtaining blank application from these parties. Some employee had some person had applied for 2 lakh rupees clean loan. They would obtain a clean application from that party. The documents will be blank. Then 2 lakh rupees will be debited to his term loan account and will be transferred to his saving account. Thereafter, this amount will be increased to say 6 lakh rupees. Application will be filled for 6 lakh rupees. Then 6 lakh rupees loan amount will be filled in the document. And this 4 lakh account will be again transferred to the debited to his loan account, and 4 lakh rupees will be siphoned off. Like this. This thing moved on for so many in so many accounts, and during their tenure, branch officials' tenure, they had never given bank statement to this party. So when the new manager came, he started giving notices because all these accounts were appearing in the SMA category. So that's why when these things came into picture. So as an auditor, we have to see that application is properly filled up. There has to be an ITR to ascertain whether that person has the capacity to repay. ITR has to be genuine. Few cases we have found that ITRs were fake, though the parties were genuine. And it's quite easy because you can check up the last 6 digits of the acknowledgement number, which represent the date of filing. So in the few accounts, we have seen that these 2 things were quite different. So this is something that we have to check up. We have to see that CIBIL score is proper. If the CIBIL is, say, over 700, it's quite okay. If it's less than that, there may be certain dues, overdues and all that. One more thing that we have to check up is whether that, though it is not mandatory, but it is always desirable that the borrower should have his place of business near the branch. Recently, we have come across one case in one of the branch where abnormally high growth is happening and some kind of reckless lending is happening. A loan has been given, cash credit account. This is a cash credit account of quite big amounts, at 2.5 crore rupees, which is 335 kilometers away from the branch. This is in a different city, which is 335 kilometers away from the branch. This is a CC account. The party is having its business in that place. It's not having any place of business in this particular area where this branch is situated. No residence, no business, nothing. So it's quite a distance for monitoring the CC account, because CC accounts need continuous monitoring. So this is not proper. Secondly, even again the same branch last month, we have found that 2 crore rupees CC account has been given to a party. which is engaged in trade and travel business. And this account is covered under one specific category, that is CGTMSC loans. This is sort of government guaranteed loans, but not up to 100%. There may be coverage of 60-70%. But what is surprising is that this company, this proprietorship concern, which came into existence in 2019, till 2022, it has not commenced any business at all, no travel trade business. In 2022, they have commenced and they have got a loan of around 2 crore rupees, exactly 2 crore rupees, which is covered under CGMSC. The loan proposal has been, there are two signatories to the loan proposal. One is the recommending authority, who is the credit manager, and one other is sanctioning authority, who is the branch head. In both the cases, the same manager is signing the recommending authority as well as the sanctioning authority is the same one. And they have accepted. Right now, assessment is made on the basis of turnover, projected turnover. So they have accepted a turnover of 10 crore rupees. And these are certain warning signals that at a later stage, things may not be proper in these accounts. So we have to check. If some kind of abnormal growth is happening, some kind of reckless kind of lending is happening, we have to be careful as an auditor and we have to give a report. We cannot challenge their judgment, but definitely that will be requiring certain kind of prudence on our part. Then documentation has to be there. Proper documents should be executed. That we have to check up. Post-sanction is also very important. Proper monitoring, proper visit, and all that. So these are things that if all the stages the branch has taken care of, it is careful in lending, then it's okay. Otherwise, there may be certain elements of things. So what are the early warnings? As far as CC accounts are concerned, I mean, we say, as far as term loans are concerned, term loans are easier to monitor. But as far as CC accounts are concerned, how I am going to identify which accounts, because there are so many accounts, how we are going to identify those accounts which may be problematic at a later stage. I will concentrate on four things: account operation, stock statements, audited financials, and visit reports. If these four elements are taken care of and they are giving certain kind of warning signals, these accounts definitely need to be taken care of. Because as far as CC accounts are concerned, because CC account needs to be fluctuated. I mean, sometimes it will be fully utilized, sometimes it will be coming down as per the requirement of the borrower as such. There are fluctuations. Less credit, that means the party is doing a general kind of things are happening. My area of concern will be lesser, but there are frequent ad hoc requests. This account has to fluctuate. If signals, if you're seeing that there are forward because of the party is not keeping sufficient balance, some other person, and they are certain kind of difficulty in executing those areas where we will be concerned with. In that case, you have to check up whether the last month's stock, say 31st March, compare them. Just check up whether the stocks which have been declared in the balance sheet and the stock statement, they match. There are not much variation. Definitely, it means that the stock statement asset. So that we have to check up. What nature of the business? If it is a pen manufacturer, I say, which can be manufactured, say, within 15 minutes, 10 minutes, and that party is holding, say, 50% of the stock as stock in process, something is wrong. This is stock in process something, WIP. These are certain things that will give, we can refer to the audited balance sheet also. Balance sheets. So many variations which are coming in the balance sheet when granting the loan, and ultimately the account had to be given in the CARO that there is dues of 30.84 crore. Many other things, many other qualification remarks which were there. So auditor's qualification in the audited balance. Okay, but if you're finding that these are simply bogus entries, even and check up the books of account, that that have been found as due to non-compliance of AS 22. This is a cause of concern because in one of the first one of the limit was with the branch which we were doing the concurrent audit, and the party had shown 1,550 crore rupees as stocks in their stocks. The branch manager who had visited the unit of the party clearly said that the stocks are not more than 100. Giving these are the warning signals. Identification of NPA account, this is also there are numerous ways in which the certain branch officials, branch managers have the power to say 50. Find all the branches, and it will be having credit balances. Normally, say if a party deposits some money, that is an inoperative account. This account will not be transferred to his account. That will be kept in sundry deposits account, or there is a recovery in NPA, OTS recovery, and all that. So there may be different transactions related to sundry deposit account. So in one of the branches, what has happened is that the branch official, the branch had given quite a number of accounts, NPA loan accounts, which had become NPA. So what he did, he debited the sundry deposit account and transferred those amounts to the NPA accounts, just to conceal the facts that those accounts which had been sanctioned by him, had become NPA. So if these are the things, these are certainly very, very, they are not proper, and we have to report. In one of the cases that we had found out that the account was NPA by 90 crore rupees, but it was becoming NPA. Just to avoid that account from becoming NPA, the branch officials opened one separate account, and they transferred. This party was availing limit of 30 crore rupees. Its outstanding balance was 90 crore rupees. They transferred this difference amount of 60 crore rupees to another account. They opened one CC account in the system and transferred it. So that way they were trying to fool the CBS system, because CBS will now be classified, considering the first account as being regular, and the second account will become NPA only after 90 days. So there are many other ways the accounts may be kept alive, and this is the way it happens. So just now I have taken up my time, and I would like to finish my session. Thank you very much. I hand over my the session to
Thank you so much, sir, for your great insights. Your words and knowledge of this field is immense. It really shows a ways ahead towards the future. Thank you so much, sir.
Thank you.
Our second session is being taken by CA Lokesh Gupta, sir. He has also completed LLB from Delhi University in the year 2001 and has qualified Disha with first rank. He has vast experience in conducting statutory audit, concurrent audit, stock audit, and internal audit of banks, both in public and private space, for more than 20 years. I request you, sir, to take the sessions from here. I think sir is not there.
Thank you, Diksha ji. So first of all, my thanks for the Internal Audit Standards Board for inviting me here to share my views on this very important topic of regarding banking. And I've been allocated the duty to speak about banking frauds. Now, banking frauds per se, I feel is one of the most important areas when we talk about banks, because when it comes to banks, they are really concerned about frauds happening in their branches and their centers. So this is one of the areas where they are really concerned. So whenever we talk to banks, especially as an auditor, so the one of the major concerns they have and one of the major areas they want us to work upon is to somehow prevent frauds or detect fraud before really they make an impact on the organization, before they are too big to actually really impact the organization. So this is one of the concern areas. And frankly, why this concern is there more so in case of banking is because if you look at frauds in the Indian context, more than 50% of the frauds are happening in the banking sector, in the financial sector, actually. So that is more of a concern. So every corporate would have some kind of a concern in relation to frauds. But when it comes to a banking sector, the concern is much more because the frauds are much more. And it really impacts the bank. One, of course, there is a financial loss to the bank, and there are other factors also which we'll discuss, which actually results into bank getting impacted and the banks getting concerned as to what kind of frauds are happening or whether somehow they can prevent the frauds. If they cannot prevent the fraud, they can detect it earlier and then they can take corrective action so that a similar kind of fraud does not happen at their end. So I'll try from my side to go through the various areas which I think is more relevant from the banking perspective as far as fraud is concerned. Now, if we look at the definition of fraud, and if we talk about fraud, so frauds, it is not a recent phenomenon. It has been happening from prehistoric times, and even Cortelia wrote about frauds actually, and the basic methodology of frauds have remained the same. So how RBI is defining frauds as a deliberate act of omission or commission by any person carried out in the course of banking transaction or in the books of account maintained manually or under computer system in banks, resulting into wrongful gain to any person for a temporary period or otherwise, with or without any monetary loss to the bank. So what is important here is that there should be a deliberate act. So it should not only be a mistake. It can be an omission, it can be a commission, and there is a wrongful gain, even if it is for a temporary period. And that wrongful gain may not result into a loss to a bank to be classified as a fraud. So even if the bank is not at loss financially, even then, if there is a wrongful gain to any person, that may amount to a fraud. So that is very important, right? Now, if you look at 2013 Norton report, it ranks India as one of the top 5 countries in number of cybercrime incidents and ransomware, identity theft, and phishing attacks. So now what we will see also through some slides is that the not only the frauds are happening of a higher amount from year to year if we see a comparison. The modus operandi of frauds have basically changed. Earlier, it was basically relating to advances. Now they have been more frauds happening in the area of technology. So we'll discuss about it. Now, this is one of the analysis which I thought I should bring to your notice. This is actually analysis in terms of frauds, actually where they are happening. So it is dividing the frauds into public sector banks, private sector banks, foreign banks, then financial institutions, small finance banks, payment banks, and local area banks. And if you actually see here, the frauds are more happening, the maximum number of frauds are happening in case of our public sector banks. And more so because, of course, the coverage as far as banking concerned is happening more through the public sector banks. And recently we have seen the number increasing for private sector banks. Private sector banks earlier from being basically a city bank have moved to from smaller, bigger cities to smaller cities and now to even semi-urban areas. So the share of frauds are now increasing in case of private sector banks also. So from public sector banks, if you see in 2018-19, they had a share of nearly 90% in the frauds happening in the banking sector, which have now been decreased, which is now coming down to only 60%. Whereas in case of private sector bank, they were having a share of only around 8% in the frauds which are happening in the banking sector, which have now gone up to around 33.5%. So when we are going for an audit or when we look at a banking industry, of course, because somehow the private sector banks have increased their stake in the banking area, have moved to different areas, different geographies. So basically their share of the frauds are also going up dramatically. So that is one of the concerns which we have. Secondly, if we look at the area of operation wise, where the frauds are happening, then earlier the traditional area was advances. So if you see in 2018-19, 90% of the frauds were happening in the area of advances. And that has, though the amount remains high in case of advances even now, but if we look at the area of maybe cards and internet, that area actually showing a lot of concern in terms of number of frauds actually. So the number of frauds, though when we talk about frauds from a financial point of view, only from the amount involved, the frauds in the advances area are of a much bigger amount when compared to frauds in the area of technology like cards and internet. But of course, the number of frauds are dramatically increasing in case of technology related area. So we'll discuss about it, and of course, we'll talk about some of the frauds which may happen in case of banking, in case of internet area. Okay, now some factors which are contributing to fraud. So there is a Deloitte survey, 2015. So they have done a survey in 2012, and then they came out with another survey in 2015. So they have pointed out to some very relevant data in those surveys, which I thought of bringing to your notice. So one is factors which are contributing to fraud. So one of the factors they feel the maximum reasons, nearly 22% of the cases, the reason why the frauds are happening is due to lack of oversight by line managers, senior management, or deviation from existing processes. So that is one of the areas of concern. Then there is a business pressure to meet unreasonable targets set by the banks. This we see more so in case of private sector banks, where there are different kind of targets which are put on the staff to achieve, and to achieve them, then they sometimes, because of that huge pressure which is built upon them, they resort to some unfair practices which result into frauds. Then there are difficult business scenarios in certain scenarios, lack of tools to identify high risk patterns and transactions, collusion between employees and external parties. So this is one of the areas of concern. Then new technology and channels. So in case of new technologies and channels, what is happening is actually these technologies are being pushed towards customers. They are asked to use those, they are encouraged to use these new technologies. They don't really understand the risk associated with them. And when they are using these technologies, there's a chance that somebody actually misuses some flaw in the technology or some weakness in the technology and are befooling the customers. Then changing business strategy without changing execution plan. So you are changing the execution plan, but your business strategies you are changing, but execution plans are not changing. Then lack of fraud risk framework within the organization, and introduction of new products without adequate controls in place. So you have introduced a new product, you have not thought about it in terms of controls, and that controls are not put in place before these new technologies, new products are introduced into the arena. Then they have talked about what are the, of course, there is a financial loss to the bank. So if there is a fraud which has happened, the bank would be put to a disadvantage in terms of some financial loss, especially where the customer feels or it is proved that the bank were actually somehow responsible or negligent in allowing that fraud to happen. So apart from that financial loss, the banks also suffers reputation loss, regulatory and other compliance issues they face, loss of productivity. Then certain banks feel certain areas they feel there is no loss, and then there is a negative impact on the customer account. So if there is a lot of frauds which are happening in case of a particular bank, the customers also feel that the controls are lax, and then they start to move away from that bank. So it results into that reputation loss also and the loss of customers also. Then detection of fraud, how that detection is happening. So most of the cases, it is 21% cases, they are saying it is due to customer complaints. So the customer comes forward and complains that a fraud has happened in his account, which results into an investigation and the declaration of fraud. Then 18% each in case it is an internal whistleblower or anonymous complaints are there, or there is an audit mechanism or reconciliation mechanism results into detection of a fraud. So this is one area which we should consider. So nearly 18% of the cases, audit is actually able to find frauds. And this percentage, of course, banks expect to increase so that the auditors are able to detect more frauds and are able to pinpoint those frauds in a timely fashion. Then 16% is due to automated data analysis or transaction monitoring software. So a lot of data monitoring, data analysis is happening at the back end. So now banks are strengthening those systems and trying to make use of these data analysis techniques for the purpose of detection and prevention of frauds. Then at the point of transaction itself, so somebody gives a forged check to a bank officer, he is able to detect that the check itself is fraud. So at the point of transaction itself, he is able to detect that fraud. Then through a third-party notification, sometimes by accident also, we are able to detect frauds and review by a law enforcement agency. So these are the major factors which are resulting to detection of frauds. Then what are the anti-fraud programs which bank should be concerned or bank actually looks at? Is one is, of course, the preventing mechanism. What can be the preventive features? What can be the detective mechanism? And what can be the response mechanisms? The preventive mechanisms can be understanding roles and responsibilities, ongoing fraud awareness programs, well-designed due diligence process, and periodic fraud risk assessments. So these are, so any bank would want to prevent frauds rather than to allow the fraud to happen and then do a detection. So the first step should always be to try and prevent fraud. And of course, the most important area would be to have a well-designed due diligence process, define the roles and responsibilities of each person, the maker and the checker there, and then create awareness about the modus operandi of fraud. What are the risks associated with different shortcuts which somebody might employ, like password sharing, and then keep it on a periodic basis, because ultimately some human resource has to actually do some work in the bank. So unless I think there's a training given on a regular basis, awareness programs given to those staff, it will not result into prevention of fraud. So prevention would require a trained manpower, aware, a person who's aware about the risk would allow a preventive mechanism to actually work into place. Then the detective mechanism, which would be basically what kind of a reporting needs to be done, how reporting is to be done in case a fraud is detected, because that reporting needs to be comprehensive, that reporting needs to be timely. Okay, and somebody should be taking care of that reporting. It should not happen that somebody reports and nobody is actually looking after it. The purpose itself is defeated. Then whistleblower protection. So if fraud is detected through some whistleblower, then it is very important that there is a well-defined policy as to how the protection of the whistleblower would be done, and that no harm should come, because otherwise people would be afraid to come forward and report some kind of modus operandi which may result into a fraud. Then invest into data analytics. So we have everywhere we see a lot of data analytics happening. We see that in the tax department also, income tax department is doing it. GST is doing it. Everywhere the data analytics have taken control. So because what happens is every human has a limitation in terms of what kind of data analysis they can do. But system has a lot of power. System can do complex calculations, can do it on a faster mode. So a lot of data analytics is being used by the banks, and of course, going forward, also we really feel that banks would have to employ more data analytics techniques for the purpose of not only prevention of fraud, but to detect frauds also, to pinpoint any abbreviation in data which requires investigation and which may point out to any kind of fraud or malpractices which needs to be taken care of. Then, of course, the response mechanism, once you have detected a fraud, what kind of a response we are looking at. So what kind of an investigation process would be there? Who will do that investigation? Whether a separate team is to be formed for the investigation? Then what kind of a corrective action is to be done? Corrective action needs to be done in two phases, basically. One, of course, is the immediate corrective action which needs to be done. So suppose there is a fraud in a customer account, whether the customer account needs to be freed for the time being, whether suppose the fraud happened through change in the mobile number and the communication address of the customer, whether that mobile number and the address has been corrected in the customer account or not. So that would be the corrective action. And of course, the second step would be, of course, to understand the modus operandi of fraud and then to take corrective action as a bank, as a policy, as to what kind of a response is required at the bank level to make our systems more secure, more less prone to such kind of modus operandi of frauds, because any modus operandi is likely to be used again. So any corrective action taken to ensure our systems are updated to ensure that this kind of a modus operandi cannot be used again, or at least it makes the usage of that kind of a modus operandi more difficult, would actually result into a better system for the banks. Then the communication and then continuous monitoring, of course, is very important, very critical in these cases. So these are the anti-fraud programs which banks generally use. Now, in case of frauds, common issues, retail banking, corporate banking, and private banking. So if I try to analyze retail banking, it would be fraudulent documentation and overvaluation or absence of collateral. So my learned friend Akeshji talked about security. So security, of course, is one of the very important aspects while granting any limits, any loans, any advances to a customer. So bank actually looks at, of course, the cash flow of the customer, and then, of course, the security which they can rely upon in case the customer is not able to repay. So multiple funding, identity theft. In case of corporate banking, it is more concerns emanate from diversion of funds, siphoning of funds, and incorrect financial statement and asset stripping. So that is one of the concern areas. In case of private banking, the concerns more are towards identity theft and fraudulent documentation. So these are some of the common areas. Then if I look at frauds, we can basically, if I try to analyze fraud and to divide it into various categories, it can be basically divided into deposit-related frauds, which have come down largely due to introduction of areas like CTS and EFT, etc. Then we have advance-related frauds. And of course, advance-related frauds continues to be the major source of concern for the banks because of the highest amount involved in these kind of frauds, advance-related frauds, and then service-related frauds. And this area is a new threat which has emanated. If you look at the number of frauds which are happening, it is more so happening in the service-related area. Of course, the amount may not be as large as in case of advances, but it impacts the customer's psyche very largely because they start to feel whether the systems are correctly in place or not in the bank. So the reputation of the banks takes a hit. The customers generally in these cases would not be happy and they would move their accounts. So the business of the bank actually takes a hit. The bank needs to be very careful about the safety section. Now, if I look at classification of fraud as per the RBI, so RBI has issued a master direction on frauds. So they have given a classification of frauds. Basically, this classification is based upon the Indian Penal Code. And each area they have defined as per the different chapters of the Indian Penal Code. So like misappropriation and criminal breach of trust is one. fraudulent encashment through forged instruments, manipulation of books of account, or through fictitious accounts and conversion of property is one. Cheating and forgery, unauthorized credit facilities extended for reward of illegal gratification, fraudulent transaction in foreign exchange transaction, then any other type of fraud, especially where some criminal investigation has been started by some investigating agencies. And if you see the D point here, it talks about fraud in cash area. So cash area, the frauds are very easy to do because you have to just pick up cash and go away, and the fraud would happen. So the easiest area to do a fraud into is basically the cash area. So this area comprises of three parts basically. Though the area is single, but it has three definite parts which RBI has designed. So it says negligence and cash shortage and intention to cheat, defraud is suspected of group. So this is easy. So if there is a cash shortage and the auditor feels there is an intention to cheat or defraud the bank, it is to be reported as a fraud. Second area says cash shortage exceeding 10,000, including in ATM. Now, this area does not talk about intention. It does not talk about the auditor feeling whether there was a deliberate intention to cheat or defraud the bank. It only talks about a fact that there is a cash shortage which is exceeding 10,000 rupees. If it is so, it is required to be reported as a fraud, irrespective of the fact whether the auditor feels an intention issue or not. Okay. Then third, it says the cash shortage exceeding 5,000 rupees if detected by management auditor, inspecting officer, and not reported on the day of the occurrence by the person handling cash. So, say suppose the auditor went on a surprise cash verification, and they find out that there is a cash shortage which is exceeding 5,000 rupees. It was not reported the previous day at the time of closure of that cash by the person which were handling cash. Then, irrespective of what the auditor feels about the intention issue or it is a negligence issue, it is mandatorily required to be reported as a fraud. So this becomes very critical. Sometimes we are not aware of these guidelines, so we miss as an auditor to ensure that the correct fraud reporting is to be done to the RBI. Okay. Now, when I look at it, how the fraud reporting is designed under the Indian scenario to be done to RBI. So banks are required to do a fraud reporting through a fraud monitoring return 1. FMR, we say there is an XBRL system which RBI has designed, which is to be used by every bank. And the format is again prescribed by RBI only. So there is a complete standardization of fraud reporting across banks. Now, and RBI has also created a central fraud registry with effect from January 2016. It is a web-based and a searchable database. This has been created to create awareness amongst the banks as to the kind of frauds which are happening in the banking industry. Now, this fraud monitoring return FMR1 is to be filed within 3 weeks of detection of the fraud. So whenever the fraud is detected within 3 weeks, you have to do a fraud monitoring return 1. Whatever may be the amount may be 1,000 rupees, it may be 1 lakh rupees, it may be 1 crore rupees. It does not make any difference. Any amount reporting is mandatory. Report is online, electronically using the FMR application in XBRL system. So this is mandatory. Earlier, there was a hard copy also which used to be sent to RBI. This has been withdrawn. And now only there is a monthly certificate which is to be sent that all fraud reporting has been done. Now, in case the fraud is of 5 crores and above, then of course there is also a provision for a fraud flash report which is to be done within a week of the fraud. Now, you may have done a fraud reporting, but there would be developments happening after the fraud reporting has been done. So whatever updates are happening on the fraud report, that also has to be kept on updating. The bank has to keep on updating those developments against that entry in the online system. And then RBI also talks about timely reporting of frauds. The one they say that if you do not do a fraud reporting on time, panel action can be initiated against the bank. And we have seen multiple times that the banks have been penalized by RBI for either not reporting of fraud or delay in reporting of frauds. So it affects one, the regulatory compliance, it penalizes the bank, so it creates a financial risk, and of course, it creates a reputation risk for the bank. And then further on, it also provides that in case my learned friend KG also talked about it. So in case of advance, if there is a fraud, then it is to be directly reported as a loss account. And in case of a loss account, the provision requirement is that you have to do 100% provision, ignoring any security which is there. In case the timely reporting of fraud has been done, so RBI allows a leeway in terms of that the provision might be done over 4 quarters, starting off with the quarter in which the fraud was detected. In case you delay the reporting of the fraud, that 100% provision has to be done in the first quarter itself. So kind of a disincentive in delaying reporting of the frauds. So this becomes very critical activity for an auditor also. So though the fraud reporting is to be done by the banks, but as an auditor, we are required to verify, we have to check whether the correct reporting has been done, whether all the frauds have been reported, and whether there is a timely reporting of frauds which is happening or not. So this becomes a critical activity. Now, cases of attempted fraud need not be reported to RBI. Then reporting of frauds by auditor. This is again a very important area. So when we talk about fraud reporting, we talk about fraud reporting. There is a concern that when we look at our appointment letters issued to auditors, it talks about a fraud reporting which the auditor has to do directly to RBI Mumbai and to the chief executive officer of the bank also. So it says to specifically report simultaneously to the chief executive officer of the bank and central office of the Department of Banking Supervision, RBI Mumbai, any matter susceptible to be fraud or fraudulent activity or any foul play in any transaction. Any deliberate failure on the part of the auditor renders himself liable for action. So this is something which is there. These two paragraphs which you are able to see is there in every appointment letter sent to an auditor because RBI requires banks to do so. And it actually puts a responsibility upon us as an auditor to do a fraud reporting and directly to both RBI as well as the chief executive officer of the bank. So this is an important area which we need to keep in mind, especially when we are auditing a bank branch. Now, closure of fraud cases. So after certain steps has been taken, then the closure of fraud cases can be done. And then there's also provision for reporting of frauds to police and CBI. So in case of private sector banks, all frauds are to be reported to police authorities only. In case of public sector banks, any fraud of more than 3 crores needs to be reported to CBI. And below that, it is to be reported to the local police authorities. Then this guidelines also talks about theft, burglary, dacoities, and bank robberies. So these are not actually frauds, but they are also required to be reported immediately on happening through email or fax. And then there is a quarterly reporting also, which is there. Now, the important area is if you see there is a one RBI has placed a lot of reporting mechanisms into place, and secondly, not only reporting at an initial level, they are also asking the banks to do a complete updation of the reporting. They are asking the banks to do a closure of the frauds. So this actually shows a lot of concern in the mind of both the bankers as well as RBI in relation to the frauds. And this is the kind of focus which is required to be given for, of course, the reasons being multiple factors as we discussed. That it really affects the banking industry more in comparison to any other corporate sector. Now, there is also a concept of a red flagged account, which is there, which is applicable to accounts which have an exposure of 50 crores or more at a level of a bank. So, and we have a concept of early warning signals. These concepts were added into the new LFAR format, which was prescribed by RBI also for the auditors. So we'll not get into much of it right now, but these are again very important and we should be aware of it. And we should actually use these early warning signals for the purpose of checking for any cases which are required to be reported as a red flag. Now, we will. I have a limited time, so let me get into. I wanted to actually speak about an area of some case studies on fraud, which I think would be more useful for us to understand this area. So I'll take another 10-15 minutes of the time to speak about it. So one of the area in case of frauds were which was happening a lot in recent past, wherein one property was sold equitably mortgaged to different banks on the basis of forced title deeds to obtain credit. So this was at one point of time, it was a very big menace which was happening, and a lot of cases we were seeing where a single property was mortgaged to different banks. And this was basically possible due to the concept of equitable mortgage, where the mortgage was been created by deposit of title deeds. Now, certain fraudulent persons were basically doing colored photocopies of those title deeds and depositing it with different banks. Now, of course, to take care of it, the bank, the RBI, and the central government came up with the concept of CERSAI, where registration of charges with CERSAI became mandatory. It started off with equitable mortgage only of immovable properties, and later on they decided to include that registration or charge with CERSAI is required for all cases, whether the security is in form of an immovable property or a movable asset, or even in case of an intangible asset. Also, registration of charges with CERSAI has become important. So, as an auditor, I think this is one of the critical areas, especially when we look at advances, that whether the registration of charges with CERSAI has been done and done in a correct fashion. So sometimes we have seen that incorrect charges has been created in CERSAI. So that also we need to take care of. Very important as far as advances area is concerned. Then this was again an area where a lot of frauds we saw, where basically under construction property was mortgaged for the purpose of taking maybe a housing loan. And in those cases, the problem was even an equitable mortgage cannot be created, because frankly, there is no property where equitable mortgage is there, can be created. So in those cases, also now CERSAI charge has become mandatory. So this is one of the steps which again the government has taken for the purpose of ensuring that frauds do not happen in this area, where a single flat was sold to different persons, and those persons took loans from different banks. And when ultimately the builder was not able to complete the property, or builder ran away with the money, then suddenly the bank realizes that against a single flat, multiple banks have financed different customers. So they were befooled actually. So of course, the now CERSAI charge is to be created even for properties under construction, like builder properties. So that is one of the ways through which control can be achieved to ensure that frauds do not happen in this area. And advances in jewelry sector. So we saw a lot of areas, cases where in jewelry sector frauds are happening. This emanates again from the fact that sometimes in case of verification of stocks and verification of various practices in jewelry sectors, banks do not employ adequate or technical staff for the purpose of verification of these areas, and has resulted into a lot of frauds happening in the banking sector. Then advances in manufacturing sectors, a lot of frauds have happened there. Then housing loans. So overvaluation of property is one of the most common area. Collision of valuers with borrowers, wrong legal scrutiny or incorrect land records or chain documents, double mortgage, incorrect employment, fraudulent income tax returns, duplicate PAN card, disbursing loan without taking search, etc., fabrication of income certificate, balance sheet, etc. So these were most of the common areas in case of housing loans. Then jewel loans, passing of fake gold as genuine by the borrowers in connivance with the appraisers. So this is one of again a risk area where the bank officials are unable to detect the value of the jewelry being offered, and they use some kind of an appraisal mechanism, and appraisers are in connivance with the borrowers and results into overvaluation or passing of fake gold as genuine jewelry. And then when the customer does not repay, and bank actually goes for maybe a sale auction of those jewelry, then they will suddenly realize that they are fake jewelry basically. Then phishing. So technology-related frauds is why we talk about. So phishing links. So a third-party phishing website which looks like an existing genuine website, like a maybe internet banking website of a bank. And when you actually try to log in through that site, it actually captures your username and password, and then before you realize, actually your account balance is taken away by actually using that email, using that username and passwords which you have supplied on that phishing website. And these actually, what they do to encourage people to actually visit those sites, they actually send SMS messages through social media, email, instant messenger, or sometimes when we do, sometimes people, what they have habit is they do a Google and they want to say visit a XYZ bank internet banking. So they'll do a XYZ bank internet banking website. And these fraudsters, what they are doing is they would create a link and that would appear as a genuine link in case of a Google, and which results into these kind of frauds. Then we have phishing calls wherein customers are approached through telephone calls, social media postings as bankers, company executive, insurance agent, government official, and they also share some customer details, basically their name, date of birth, etc. And the customers are basically tricked into sharing their confidential details such as passwords, OTP, PIN cards, verification value by stating an emergency. And when this critical information is basically being misused for the purpose of defrauding the customers. Then we have identity theft like online sales platforms. So we have, you must have heard of cases where somebody put some goods on sale on some online sales platform, and some person acted as if he's interested and he was ready to pay and send him a request to transfer the money. And through UPI, actually, they were defrauded into actually losing all the money which was lying in their UPI account. Then we have cases like fraud apps. So fraudulent apps are being circulated through SMS, email, social media, etc. When you download these apps on your phone, actually it results into so these apps would ask for a lot of permissions, which without thinking we allow, and a lot of important data, which is there in emails or which is there in case of SMSs or which is there stored in our hard drive of our mobiles, actually is stolen by these apps, and which is again misused for the purpose of giving a financial loss to the customer. Then ATM card skimming. So we have seen cases where some kind of skimming machines were put on the ATM machines. So when you actually use your card, they are able to duplicate that card, get your the pin of the card and use it for the withdrawal of cash from your account. They have sometimes used small pinhole cameras for the purpose of uh, checking what kind of a password you are putting. And then basically these kind of frauds are, we have seen in a lot of cases this is happening. And this is more so because earlier what we have seen in case of banks, that earlier ATMs were less in numbers. Generally, there was a guard which was standing there for 24 hours. Now this has been done away with because the ATM numbers have gone up and the banks do not want to put that cost basically. So in a lot of cases, what is happening that these kind of skimming machines are being used to defraud the customers. Then identity theft frauds in case of screen sharing apps. So a lot of times we have seen people using screen sharing apps like WeShare, etc. And these actually screen sharing apps, though sometimes serves a useful purpose, can also be misused for the purpose of hijacking the system of a person and taking out confidential information, which can be misused for the purpose of doing a fraud. Then we have SIM swaps, wherein duplicate SIM is used and which is somehow used for the purpose of getting OTPs for the purpose of doing fraudulent transaction in the customer. Then we have transaction like search engines, wherein people especially use Google and these types of search engine for the purpose of getting details of websites to visit, etc. And dummy websites are being basically created for the purpose of capturing the details of the customer once they actually visit those websites. Then social media. So social media also is being used, like in a lot of cases, Facebook, Instagram, Twitter, etc. is being used. And we have seen cases recently where people's WhatsApp accounts were hacked, and they requested, the fraudster requested the friends and the list of the contacts of that customer, of that person, to actually send him money, which would be a small amount like 5,000 or 10,000, and he shows some kind of an urgency. And out of that relationship between these two parties, they will send the money thinking that they are sending to their friend or relative, and which would be basically they would be sending to the fraudster. So this kind of areas we have seen. Then juice stacking. So this is one area where we have seen frauds happening, wherein we use basically the charging port of a mobile. So we want to charge our mobile. We are very uh, finicky about keeping our mobile up to date charged. So we use some kind of a port to charge the mobile in various public places. And these, when we use that data cable for the purpose of charging the mobile, it can also be used for transfer of oil. And so these sometimes we need to be careful, because these kind of charging ports can be misused, can be designed in a fashion with some kind of malicious software to steal your data while you think you are basically charging your mobiles. Then lottery frauds, where we have seen customers email or making phone call has won a huge lottery, and then they ask for some kind of taxes or charges, upfront handling fees, whatever, which is used for the purpose of basically defrauding the customer. Then money mules, so basically customer account being hijacked and being used for doing a fraud, and the customer is not aware. And then ultimately, when the investigation happens, they suddenly realize that their account has been misused for the purpose of doing frauds. Then we have seen cases of fraud through BG facilities, and where this was one of the frauds, huge fraud, more than 1,000 crore, where BG were issued in favor of foreign beneficiaries. And these foreign beneficiaries collateralized these BGs with foreign banks for the purpose of obtaining credits. And these funds were sent to this Indian party as mobilization advance. And then these amounts were withdrawn, and further BGs were issued. So they continued getting BGs issued by saying that these are required for getting mobilization advance for some project which we are doing in India. And the banks got defrauded in such a case. So these kind of issues we have seen. Then we have seen cases of unauthorized debit to inoperative accounts, fraud in car loan accounts we have seen. We have seen cases of fraud through requisition of checkbooks, through return security items. So these debit cards and checkbooks now are generally not issued from the branch. They are generally, the request is taken and a centralized agency actually prints and then send it to the customer's address directly. In certain banks, the policy is that in case it is not received by the customer, it is sent to their home branch. There is a lax control over the receipt of these checkbooks and these debit cards. Now, what is so important about them is they are actually issued in a live account, and they are actually highly prone to a misuse. So we need to be very careful about these kind of return security items. And misuse of office accounts. So office account generally being a very sensitive area in case of banks. And one why they are so sensitive is because they would have large number of entries typically, and these entries would basically be of large amount, and then it is not relating to a customer account. So any fraudulent entry done in these accounts, there would not be any complaint from a customer. So, and any auditor which is seeing these office account would generally see a lot of large entries in the account. So chances of he detecting such a fraudulent entry becomes more difficult actually. So these office accounts have been used time and again for the purpose of achieving a fraud. So we need to be careful about it from the banking perspective. Then fraud and withdrawal of after that of account holder, fraud by fraudulent account opening. So KYC, of course, is one of the most critical areas where bank is working upon. One, of course, because of the regulatory concerns it is associated with, because lax KYC policies would not only result into some kind of a fraudulent activity, it might also result into money laundering happening, which then again would result into banks getting penalized and banks suffering their reputation risk because of some errors which they might have done in the KYC processes. Fraud and fraudulent account opening can be one of those areas. Then fraud by fraudulent cash withdrawals. Then fraud by kite flying operation, again relating to advances data. So some kind of a credit limit is being enjoyed without actually doing any kind of actual financial transaction. So that we need to be very careful about. Then fraud by loan in name of non-existent staff. So these kind of frauds we have seen. Then fraud by duplicate FDR. Now, when it comes to loan against deposits, even my learned friend Akesh talked about it and told us that in case the FD balance is more than the balance in the OD or the DL account, then in that case, the account cannot be classified as an NPA. So sometimes we start to think that these FD accounts need not be FD against OD, OD against FD or DL against FD need not be really looked into or need not be carefully checked for. But we have seen cases where frauds have happened in this area itself, and frauds have happened where customers have given FDs, they were not aware, their signature were forged, and they were used for the purpose of creating OD accounts against those FDs, and the funds were misused or were diverted out of the banking system. So these kind of frauds we have seen. Then these were some of the frauds which we wanted to discuss today. I think I have taken the time which was allocated to me. So thank you so much for your patient hearing. And I thank you, ISB, once again for allowing me to share my views on this area with the members of the. Thank you so much.
Thank you so much, sir, for your valuable insights. I am sure your address will help a lot in understanding the conceptual approach to the topic. Thank you, sir. Our third speaker is CA Premnath D. Sir. He is qualified Disha and FAFD conducted by ICI. Has completed his graduation from Sri Venkateshwar University, Tirupati. Presently partner in Messrs. C. Ramachandran and Company Chartered Accountant, Hyderabad. He has wide knowledge and experience in statutory, concurrent, revenue audit of banks and internal financial control of PSU, listed large manufacturing and private limited companies. So please enlighten us with your insights. Over to you, sir.
Yeah, thank you. Thank you very much. I thank Internal Audit Standards Board for giving me this fantastic opportunity to interact on internal controls in banking, more specifically from the CBS point of view. My job of presenting this is made very easy by Lokesh Gupta sir and Vyas sir and Nanda sir. If you look at the opening remarks of Nanda sir, he clearly said that banking is the industry which is using public funds. So there needs to be a lot of controls in banking environment. Controls, I mean, two major controls, preventive and detective. That's what Lokesh sir was also emphasizing, and then he was elaborating it for much of the time on the frauds. So the moment we talk about internal controls as per the definition, the concept is to prevent fraud and errors. Fraud is intentional, error is unintentional. So basically, it is to prevent frauds and errors. So the control itself is talking about prevention. And if prevention fails, next comes as detection. So audit is a part of detection. The role of management is to prevent. role of auditor, more specifically the concurrent auditor's role is detection. So let's look at these issues through a formal presentation. So when you talk about systems, this is what we'll be talking about in the next 45 minutes or so. Systems, there are what kind of systems we have. What kind of systems we have? I've said here, more the technology and lesser the technology. So if it is more the technology, the impact is, it is a single digital framework which is integrated, wherein there is a risk management and corporate governance is all sitting on the single platform, which is a digital framework. That's what I say, it is more technology. So under these situations, what will be the role of a chartered accountant? The role of chartered accountant will be more of systems audit and a review of controls under this platform. But to what extent technology can be used is a bigger question. Let's go on discussing it. So next one is lesser the technology. Lesser the technology, impact is more of manual and digital spread, manual maker and checker, which high risk. The more the manual and more the digital, the combination or the hybrid, which is now prevalent across almost all the PSU banks. This is what is used. Though they say CBS, as we go inside, you will understand CBS is only a balance sheet machine. CBS is a balance sheet machine, not an internal controller. You'll understand. So lesser the technology, you have higher manual and a combination of manual and digital, wherein manual maker and checker things are there, which is of more of detective rather than a preventive. We all know prevention is better than cure. Under this situation, more of substantive, the role of chartered accountant is more of substantive procedures, which will be of high cost for a chartered accountant. And we need to use more the tools to validate the data, which is not validated by the banker. More the technology, the banking or a client, let's not be very specific to the banking at this point of time. More the technology, more the validation is done at the transaction initiation stage itself. So the lesser the role of a chartered accountant in transaction validation. Lesser the technology, more the role of a chartered accountant, more the role of a chartered accountant, more the tools, because you have a higher manual and digital combination. So we need to use more the tools to validate whether the transaction is true or fair. And what is the substance of lesser technology in the banking in India is lesser only, but not highly technology. High technologies like blockchain, integration of tools is happening more in the private sector banks rather in the public sector banks. So I said controls. When I say controls, it is preventive controls. Preventive controls for what? Validation. Validation, how does this validation done? Validation is done through mandatory fields, and mandatory fields can be drop down, pre-fill, data security, all those things has to be ensured as a part of role of chartered accountant under more the technology. If technology is inbuilt with preventive controls, the role of chartered accountant will be to validate whether the system is able to prevent, whether the system is not allowing mandatory fields to skip, and about the data security. Then, when the technology is not that much, when the preventive controls are loose or ineffective, then the role of detective controls will increase drastically. That's what I said here. So under detective procedures, the role of chartered accountant will be to convert the text, will be to download the reports. That's what Nanda sir was talking about. Look at the CBS reports, use CAT tools, internal controls, substantive procedures. So the compliance and substantive procedures are in the form of detective procedures, which is none other than downloading the CBS reports. After downloading it, convert the text to columns to make it usable in the spreadsheet like Excel or whatever. And then join, merge, append, sort, filter, conditional formulas, lookup, pivot, macros. All this has to be used by the chartered accountant to validate the transactions that are not validated with more technology. So I am at the cost of repeating, I come back again. If preventive controls are weaker, the role of detective procedures will enlarge with more the tools are these kind of things. Now, so having understood this, technology to what extent? So I said more the technology. So to what extent technology can be used in data processing, in validations and all? Technology to what extent in marketing, in processing, in appraisal? That's what Vyasar was talking about. You have various processes in the banking, loan appraisal, sanctioning, disbursement, monitoring, and so on and so on. So under all those various processes, like right from the marketing, processing of loan application, appraisal, mortgage, lending, review, monitoring, recovery, reporting, compliance, in all these, what is more technology? If there is no more technology, it is like lesser the technology. And if it is lesser the technology, more the tools needs to be used. So I said controls. Again, I'm repeating it. The controls are technology used for preventive controls. If preventive controls are not used in marketing, processing, appraisal, mortgage, lending, review, monitoring, recovery, reporting, and compliance, repeating again, if technology is not used, if preventive controls are not used to validate the transactions of marketing, transactions of processing is not validated, appraisal is not validated, mortgage is not validated through preventive controls, then the role of chartered accountant as a detective procedures will enlarge. Detective procedures in marketing, detective procedures in processing, detective procedures in appraisal will enlarge. So the role of chartered accountant is to understand manual controls or system controls. Okay. So what is the audit methodology going forward? So as I said here, the audit methodology going forward should be systems audit if it is technology, control reviews with substantive procedures. That's what Nanda sir was talking about, substantive and compliance procedures. So when you talk about audit methodology going forward, there needs to be a system audit role of chartered accountant. Then control review substantive procedures. More important, I said here, we need to use more of tools. What kind of tools? AI, bot, and whatnot. A lot of technologies for the auditor is in use now. So we need to use all these technologies as a part of data analytics. Data analytics is only to ensure that the data is properly validated at the banker side, which is given to us. So I said the essence of today's topic is understanding the systems, understanding the controls. If controls are weak, carry out the detective procedures. This is as simple as this. So if I am able to understand the detective procedures, then I can suggest preventive controls. Like Lokesh Gupta sir was talking about, what are all the forms needs to be submitted to the RBI as a part of fraud reporting. And every day or month or a weekly number of fraud reports are filed with the RBI with the modus operandi. When the modus operandi is submitted to the bank, to the RBI, meaning there are failures of preventive controls. Now, when a preventive control is failed and this is intimated to the banking regulator, now what action is taken on the platforms of CBS to arrest? We don't see that. Now, a lot of tons and tons of data is submitted to the RBI on the fraud mechanisms, but nothing comes out from the RBI to the bankers in terms of guidelines, in terms of how to structure the CBS, how to enforce controls, how to strengthen preventive controls in the banking. Nothing comes back from the regulator, but only one-way traffic. It's a one-way traffic where the data is going into the banking, into the RBI. RBI or the head office will instruct for the CBI or ED's intervention, the police complaints and all, and that is a roadblock. And whenever a report is submitted to the higher authorities, there needs to immediately they jump into and stop the loopholes in terms of tightening the preventive controls. But that process is very less. Of course, that is the objective of an concurrent audit. Concurrent auditor needs to understand the detective procedures. Once if I am able to understand the detective procedures, then I can convert the same detective procedures as a preventive control. Like say, for example, let me just take up an example. Let's take up one erroneous fraud which has happened, which is reported in the CBI. I think I'm able to flash this PDF. Can someone confirm on the meeting?
Yes, sir, it is showing.
Yes. Right. Thank you, ma'am. So here, this is a fraud happened in IDBI. An FIR is filed by the IDBI to the CBI. And you can just see here, as per the forensic audit report, so and so, 52% worth of goods were sold in so and so to so and so parties and so party, having a common directorship, Sri Vyas Vanijya Private Limited. The common director is Mr. Debashish Paul. And you can just see this not backed up by LCs and all. Okay. Now, how is this? How this has happened? Let's just go on. Now, this is what you can go on to a TOEFLer. I'll just come back to this TOEFLer again. But before that, Debashish Paul. And this is what you see here. Debashish Paul is a common director, wherein he is also a director to this, to which 137 crores of sales is made without any backup. Now come back to this. Debashish Paul is a common director of, this is a case of Harsha Steel. This forensic belongs to Harsha Steel. This is a Harsha Steel. And you have one director here. And another director here is Debashish Paul, who is a director in this Vyas Vanijya Private Limited and other things here. Now, through this common directors, the sales has been made. Now, we are talking about preventive controls. When it is a sale or a purchase, payments and receipts keep coming into the current account or to the loan account. Either comes into the account or goes to the other account from the related party. Now, whether banker is not aware of these transactions, whether a receipt has come from a particular party, payment is made to a particular party of those related here. Now, how do I'll come back to this. So whether banker is not aware of this, whether there are no systems in place in bank to identify the related parties of the borrower. Is there a system to capture in the banking, first of all? Like we have seen Lokesh sir's presentation. 20 to 25% of the loan of the frauds are from the loan frauds. Huge amount of frauds are going on into the loan related. Now, such a big amount. And what is the size of banking fraud? 3 lakh crores is a banking fraud, meaning almost 2 months of GST collections in this country is what is a banking fraud in this country. And that's a public money, as rightly stated by Nanda sir. Now, there are no controls. Yes, but is there a facility to control in the CBS? Yes, there is a facility to control in the CBS. There is a facility to control in CBS. Where is it? Let me just take you there. Yeah. This is a place where it is group. I'm talking about the customer master maintenance. Customer master maintenance. Group is given here. So while the account is created, this can be tagged as a group. The moment you tag this as a group, all the receipts and payments account to this account holder can be tracked. If you want to prevent, you can prevent using this field, writing a small syntax. Whatever payments are made to this group, let it get validated through a system of arm's length pricing, maybe a certification or whatever it is. Whatever payments are made to the group, once you define it here, then you are able to get a control. But whether this is a mandatory field, no, you have not made this as a mandatory field. You have not made this as a mandatory or a compulsory field. But whether there is a facility in the CBS to prevent group transactions, yes, there is a facility in the CBS to track related party transactions. So once you make this as a mandatory, then you can track. Now you want to make, once you're able to track, now you want to prevent it, you can create a logic before the transaction takes place. Like one more, the moment a transaction comes onto the group, let one more field come up. For what reason? Whether it is authorized, whether it is already apprised at the stage of sanctioning of the loan, then stop. So you are integrating the loan processing platform with business operating platform. You're integrating it. Come back. So what I'm trying to say here is, I'm coming back to the very first slide again. I said more the technology. I'm saying single digital platform where it is integrated, the loan processing platform to be integrated with loan disbursement or accounting platform. Then you are able to say it is a preventive control through validation through a mandatory field with a drop-down, pre-fill, and data security. And has this happened here in this case? No, it has not happened. When was it? 2015-16. What is the status today, 2022? Even in 2022, this is still not made mandatory. Most of the viewers here, I think they concur with what I'm saying. You don't see that particular field, what I have shown here, is made mandatory. Yeah, this field is not mandatory. I think there are many viewers here. If at all there are any concurrent auditors attending, you can revisit this when you visit the next time when you visit the bank. You can go into the customer master maintenance and demand them about the controls in this. But now here again, coming back, what I said here is technology to what extent at the marketing stage, processing stage, appraisal stage, mortgage stage, lending stage, review, monitoring, whether what activities needs to be carried out in all these stages. Is it manual or digital? What the controls say? Let me see what controls bankers are able to say. Let me take you to an example. Yeah. So I'm just taking you to an example here. Now this is about internal financial controls. I'm just demonstrating internal financial controls matrix, credit monitoring, recording of entry. Is this recording of entry is manual or automated? You can see here the control activity is maker and checker control is in place. Why this? What can happen with this credit monitoring? The risk description is non-recording of entries in parties account. Fictitious entries are recorded in parties account. Incorrect entries are recorded in parties account. Entries are recorded in wrong parties account. Unauthorized modification of entries in parties account. If you can recollect Gupta sir, Lokesh Gupta sir's presentation, he has given one slide where these risks have occurred many number of times, but still, even in 20 and 21, all the banks are saying it is a manual maker and checker control at the branch level. This is the seriousness what the concurrent auditors needs to communicate. Come back. I'll just take one example and then link the same with the internal controls on the CBS, and then we'll move forward. And this is a case of 2018, which is still prevalent, of case of 2018 of a gold loan SBI branch, Vishakhapatnam. I'm just naming this because the data is publicly available today. So what has happened there is multiple gold loans were availed by 246 members, 319 accounts of 6.69 lakhs, 669 lakhs, where gold loan bags were not traceable, sanctioned in. Most of the loan applications do not bear photos, not adhered to KYC and signatures as required by the bank. This is what Lokesh Gupta sir was saying. Signatures of borrowing are differing in few cases. And you find so-and-so is used to create loans, a bank staff used to create in CBS without even pledging the gold ornaments. In 37 cases, gold loan sanctioned were more than the value of ornaments. So-and-so is a loss. So let us look at the internal controls around sanctioning the gold loans process flow. Yeah. Viewers who are viewing on their cell phones, they can't appreciate this because the sizes will be very less. Now you can just see here this legend of square box or rectangle. The legend of rectangle box talks about all manual processing. How many processes are there for gold loan? You can just see here how many processes are there for gold loan. There are 15 processes for gold loan. In all these 15 processes, every process is manual except for one process, which is the legend of a diamond shape here. And this talks about CBS. I'll come back again to what I've stated in my presentation. I said more the technology, preventive controls validation, lesser the technology, manual and digital spread, more the tools need to be used, meaning lesser validation is being done. Look at here. So first what happens? Application is received, manual application is received, which is punched into another software. Once a preliminary scrutiny of application is done, then once it is accepted, then they punch into one software and then they will move that data into the CBS. Now you can just look at here what Lokesh Gupta sir was talking about, the KYC. Now you can just look at this question itself. Once the sanction authority is apprising it and sanctioning it, now there is a question here whether client already has a CIF ID. If yes, they will attach it to that CBS. If it is not, then they are trying to create one customer ID. Meaning, why should this question arise whether a person has CIF already? The moment when you take the application itself, there should be a scrutiny whether this person is already an existing customer or a new customer. That validation system is not doing, but this validation is manually done. Manually is more the maker and checker, lesser the preventive control, more the detective control. And if detection fails, it may result into a fraud or it may result into an error. And that's what here. And that's what we are again and again saying. The preventive controls are weak here. There should not be a question here. At the time of accepting itself, you should decide whether this fellow is already there on board or not. So how do I say whether there is a CIF or not? Why do you ask a question? Why can't a system develop? Why can't a system have an artificial intelligence? The moment you enter the data into the application format, into the application, the system should start saying this fellow is already there in the system. Why do you create one more CIF? That is artificial intelligence. Whether do you have such processes? Such processes are not in place as a preventive, more specifically in public sector, but it is there in private sector. So how that works? Having said, but is it still there are CIF, multiple CIFs are there still? Having talked about CIF and KYC, let me just demonstrate to you our recent experience in one of the bank. You can see the same customer having multiple CIDs. Same customer having multiple CIDs. How do you get this? Take the data, put it into, this is the data. This is the data. Just a minute. Yeah, okay. So this is the data, and then here we make this pivot tables and all for each of the CIF and account number wise and CIF wise, and you have phone numbers also in this. Each phone number is tagged to multiple accounts. So let's just have a look at this. You can just have a look at this. One phone number is linked to here. One phone number is linked to 9 CIF IDs. And this is what you see here. Multiple CIFs for one phone number. Okay, this is one issue. Meaning, even today, as Lokesh Gupta was talking about, you can see here, each person having how many CIFs. Okay. Now, whether this question meaning the bank, when the bank has designed this internal control chart flow chart, they themselves are accepting that there is an internal control weakness here, and hence a question is developed here. But now what processes? So what made me to find out? What made me to find out there are multiple customers? One is that through a mobile number, I am able to see one mobile number is linked to multiple IDs. One name is linked to multiple IDs. When I am able to make it a detective control, this is what I'm saying here again. When the preventive fails, the detective procedures are enlarged. I know that the preventive controls are failed or ineffective, so I'm making a detective procedure through various tools, and with one Excel, I'm able to make this. When I'm making this, whatever I'm able to do, it can be made as a syntax, as a program, and put it before the transaction takes place. That is called as a preventive validation controls. So that's what I said in my initial remarks, that I should understand the detective procedures and tell the management that, Array, you carry out these procedures not after the transaction, before the transaction. The same detective procedures, if carried out before the transaction takes place, it is called as a preventive control. If preventive control validations are weak, the same procedures I have to carry out for the detective. So what I'm saying is, procedures are same. If you take out after the transaction is taken place, then it is called as a detective procedure. If the same procedures are put in place into the system before the transaction takes place, it is called as a preventive control. So I'm saying here, what is a detective procedure I have done? The detective procedure is mobile number wise. I am able to see in the application whether this mobile number is already there, whether this Aadhaar number is already there, whether PAN number is already there, whether email ID is already there, whether father number, father name, surname. These are all the variables which may indicate duplications. Now, whether at the stage of processing, the application, do you have such controls which is validated before the transaction takes place by the system? No. And hence, I, as an auditor, able to do this as a detective mechanism. So, are there examples still going on? Yes, you can just look at this. Again, multiple customer IDs for same name. The name is changed here, Radha K Radha. And the fun is, if you can look at, the fun is, The fun here is it is staff. The person having multiple IDs is a staff, meaning the controls around the bank or controls around the processing with respect to staff training itself is so weak. And this has to be highlighted as a concurrent auditor to the highest level so that the systems are made effective. The role of chartered accountant, more specifically the concurrent auditor, is to highlight these so that fraud can be prevented. And that's what Lokesh Gupta sir was very well demonstrating, the various types of frauds which are just coming out of the internal control, ineffective controls around CBS. Whether CBS is useless, no, CBS is made fantastic, but the way in which it is used is so pathetic in the public sector banks. But the same things are not happening in private sector because they are proactive. They are at the higher level. They are trying to control, because public sector works on discretionary powers because of various political issues and democratic issues. It works on a democratic platform where the powers are distributed at the lower level without proper control. And that's where the role of chartered accountant and controls is, we have to work on that. Okay. Having said all this, and how do I carry out this similar names and all? Yes. So here I just say like all names, the surnames and all, you can find out through a fuzzy lookup. I'm not going to demonstrate due to the paucity of time. So, but I can just say through a fuzzy lookup, you can carry out on the whole of the bank database. You can find out the common names. Like what it does with fuzzy lookup is, if the name is A, B, C, D, and the same name is as DBCA, if you sort, you're not able to get it. So how do I find out then? Then fuzzy lookup will be very useful. Like in this, you can see in the database, you have one name called Abhinandan Gulecha. If you go down again, there is another name called Gulecha Abhinandan. More than that, you can also find out through the customer name and phone numbers, and then make a pivot chart. And then you will see here with this phone number is tagged to 185 accounts is tagged. 185 accounts, one phone number is tagged. So this itself gives some, why is one phone number tagged to so many accounts? Professional skepticism should rise. And it's not the bank, it's not the auditor who should sense something is going on. It is a management should have. How management will have a preventive? If not preventive, detective. What is detective? How detective? Is through exceptional reporting. That's what Nanda sir was talking about. The reporting should be made more effective. So it should be an exceptional reporting. What is exceptional reporting? A very simple example. In all the cars today, if the seat belt is not fixed, the moment you start your car and don't fix the seat belt, it starts giving buzzer. Throughout the run, throughout the drive, the buzzer will not stop unless you fix it. Now, it is a preventive control. More than that, if the fuel level drops below a level, if the fuel content in the car drops below the level, it starts flashing that you're in an emergency now. Now, this is that dashboard which talks about, which gives buzzer, which talks about the level of fuel, is an exceptional reporting. Yes, it's an exceptional reporting, but what about the banking exceptional reporting? Banking exceptional reporting as a customary, it generates at the day end an exceptional reporting. but no one bothers about what is there in this. Not only that, whether all the exceptions have been properly generated, like when an amount is transferred from one account to the another account who are related parties, it can lead to a fraud, it can lead to an erroneous, but whether this has been tagged as an exceptional, if this report is nowhere I have seen in the banking where the related parties are coming under the exceptional reporting. Even if it comes under the exceptional reporting, we have seen the higher level of more than the branch manager has used his discretionary power to give more than 10% drawing power for that particular day. It is reported in the exceptional reporting. But what action has been taken? And it keeps reporting every day. But what action has been taken at the branch level or at the RM level or at the top level? Whether in the car there is a repeated buzzer which is going on at all levels, that yes, there is something going wrong here. Repeatedly, these exceptional reporting is being repeated every day. No action is being done. Whether when the petrol diesel level drops below the emergency, there is a buzzer, there is an indication. But whether such kind of dynamic reporting is taking place in the banks which handle huge amount of public funds? No. That's what I'm trying to emphasize again and again with this small slide. Having said, let's come back again. We were talking about the fraud case here. As a part of this fraud case, we are talking about preventive. One person is having multiple accounts. How do we investigate that? I've talked about demonstrating the examples here. I'm demonstrating the examples here. I'm demonstrating the examples again in this case here. And we see here, because of this fraud has happened here. More than that, let's come back to the risk assessment. You can see here the risk assessment, risk control matrix, again, in one of the banks. Sales, sourcing of client. What is sourcing of client? Sourcing of client is this process. Whether this is manual, it says here, no, it is at the manual stage, the documentation lapses can happen. Risk is risk of incomplete documentation, risk of proper KYC. So the control is you need to take all this documents. Whether taking these documents is manual or system driven. As of now, mostly it is manual. Then it is transaction based. You can see it is maker and checker. And banker says, if there is any fault in this, whether this will impact income and expenditure, assets and liabilities and presentation, the banker is saying no. Banker says, if there is any fault in this, process, banker through this risk matrix is saying that it is not going to impact. But we have seen here an example which is known to the public. There is a documentation lapse here, and it has resulted into 669 lakhs in one particular case, but there are so many cases again outside. So coming back again to the same example here, like this, how many of that is manual? Let us just see. Let me just take out and filter out only manual. There are 15 processes, I said. Now I'm trying to count how many manual. You can see out of the total 15 processes, 14 processes are manual maker and checker. So come back to the presentation again. I said less. I said here technology to what extent? In marketing, it is weak technology, processing weak technology, appraisal weak technology, mortgage weak technology, lending weak technology, reviewing, monitoring, recovery, reporting, and compliance. Then what for the CBS? CBS is only a transaction processing machine. At the end of the day, it gives a balance sheet, or not even a balance sheet, maybe it gives a trial balance. So whether CBS is a control mechanism or CBS is a balance sheet machine, it all depends upon the way in which the systems are used. I think the allotted time to me is 8:30. The organizers can instruct the next course of action. Should I stop here or I can go ahead?
Thank you so much, sir, for addressing all the technicalities and procedural aspects. I hope everyone is enriching and understanding the same with clarity. Thank you, sir.
Thank you, madam.
Now it's time for the question and answer session of the evening. Shall I start with my question?
Yes, madam. Yes, madam.
First question is, please appraise us about audit tools which could be used in time-bound manner across different softwares. Shall I repeat the questions?
Ma'am, I think you should repeat the question. Prerna ji,
Yes,
I think will be the best person to answer this.
Okay, ma'am. Please appraise us about audit tools which could be used in time-bound manner across different softwares.
Excel is the best tool. Because the other tools, as it is, Excel is not allowed to be used in the bank. They are not sharing the data file. They are not sharing a simple text file. They are not sharing the. That's a wherever I go, people start saying that you demonstrate all these things. It's like an Akshay Kumar movie when we see the presentation, but when I wanted to do it, I can't do it. They say that they are not sharing the data. When they are not able to share the data, what tools I can use? There are like ACL, IDEA, ACL, NE, ANY. So many tools are there, but the banker doesn't allow my tool to be plugged into their system. I am not, but this is something different for an RBI official. RBI official will just walk into the data center, plug his high-end laptop, run the queries. In no time, he can find out the NPAs in a fraction of a second. He'll get all the NPAs for the total bank, not for one branch, because he's allowed to plug in. But I'm not allowed to plug in. Then what is the best way? The best way is to download the various files. Why various files? Because the data is scattered in various files. And then I need to use Excel to join, rejoin. That's what in my presentation I've shown it. Append, pivot table, VLOOKUP, and so on and so on. That's the best tool. Yes, ma'am. Anything, sir? Okay, sir.
I think I agree with you, sir. But unless until the bank provides us the data in some kind of a format which can be used across all these software. So one, the bank have their own concern regarding use of some external software on their database. So generally, because of that security concern, they do not allow. So I think what you said is absolutely right. We can only use Excel, which might be available to us, and all the data which we can use. So a lot of banks, what they are doing is they have kind of a reporting software, reporting portal is there where a lot of files they are generating. So we should be aware of what files, what kind of data is available to us, download all that data, and then we should be good at Excel. So Excel is something which can be a good, useful tool while doing bank audit and do some kind of a data analysis, a lot of which Prerna ji actually explained also. And that can be a good tool for doing that data analysis in a limited sense, of course. But because we are put at a limitation by the bank itself, so we can't really go beyond that actually.
Simple again in Excel. Again in Excel, you only have to, the data is spread in multiple files. So I need to join it. Join is VLOOKUP. Number one, VLOOKUP. So once you join it, you need to find out is there any duplicates at all. So you use sort. So the second one is sort. So for a report, and you may find some variations. So for that, you have to use if functions. So third one is if. So first I said VLOOKUP or sort, filter, then if condition. Then other one is pivot table. For reporting, pivot table. So all put together, you have sort, filter, if condition, VLOOKUP, and pivot. If you are able to master this 5 very simple things, it's not a rocket science where you need to launch 110 rockets, 110 satellites with one rocket. It is simple. Five basic things in Excel. If you are able to do it, we are able to crack 99% of the deviations in this. Yes, madam.
The second question is concurrent audit and internal audit are more or less same?
No, they are
Concurrent
quite
audit,
different.
yes.
This is my subject. Concurrent audit is a day-to-day audit. The concurrent audit notification came on 11th October 1991 with the main object of carrying on audit on continuous basis. While the RBI, that is called risk-based internal audit, which is being done by their own staff, that depends upon the risk rating of a branch. If it is a low risk rated branch, this audit will be done, say, after 1.5 years. If it is a high rated branch, it will be done after, say, 1 year. And this is being done mainly by their own staff as such. So right now, that is a basic difference that I would say.
And another question is, it is observed that borrowers sometimes disburse the loan amount to their family members, which is not blocked in the system. Can this be prevented by the existing software in use?
That is what I've demonstrated with one customer master maintenance. There is a field called group, and that field is not made mandatory. And that's the reason why they don't bother. Like, in Tally, when I create an account, I'll create fixed assets, furniture under fixed assets, and there are a lot of other things to be fed into it, but I'll just say Control-A, save it. Now, when a customer account is created in Tally, it will ask for so much of data. The moment I'll create a customer name under suppliers or under trade payables or debtors or creditors and say Control-A. The CBS is also working under the same lines. There are so many fields that they don't bother to fill it. Then in that case, why so many fields are created in CBS? We don't have a time. Otherwise, I'll explain each field, what is the relevance in which act. Banking works under different act, FEMA, GST, IT, prevention, so many acts are there. Under the part of concurrent audit, they take one full day session on it. So under all those acts, there are so many things that a bank has to comply, and so much is created at the time of account processing. But nothing is fed into it. When nothing is fed into, why an exceptional report is not generated? If exceptional report is, yes, exceptional report is generated. But why action is not taken on the exception reporting? This is the role of a concurrent audit.
Yes. Another question is, when a third party allows premise as collateral, why he is forced to sign as co-borrower for whole loan, where his intention is only to give premises as security guarantee? Can you suggest any remedy for the guarantor?
Sorry, the question is not very clear. Can you repeat it?
Yes. When a third party allows premises as collateral, why he is forced to sign as co-borrower for whole loan, where his intention is only to give premises as security guarantee. Can you suggest any remedy for the guarantor?
Actually, the question to me is not very clear. If it is a home loan, then only the borrower, the home loan will be in the name of the borrower. The third party does not come into picture. The third party will come into picture when that party is mortgaging the loan taken by the borrower. In that case, the third party will be the guarantor in that account. That is compulsory. He need not be the co-borrower in that account. But as far as home loans are concerned, definitely that will be in the name of the borrower. No third party will be involved.
Okay, sir. Another question is how a bank can increase its credit rating to topmost AAA rating.
What does it mean? Can you repeat it?
How a bank can increase its credit rating to topmost AAA rating.
Banks do not have AAA rating as such, to my mind. I mean, borrowers have AAA rating, and that will depend upon many factors. And that this rating is being taken care by the external rating agencies like CARE and ICRA and all that, and they have different parameters for that. So these AAA rated accounts and all this AA rated accounts, these are all borrower wise and not bank wise as such. And there are different parameters for these rating agencies to take care of as such. But mind you, AAA rated, though they are best rated accounts, but we have seen many cases like ILFS. Once it was a triple rated account, and within 4 months, it came down to D category. That is a default category. So government right now has got stringent, more focus on these rating agencies also. So this is one thing. And recently, one of the rating agencies' license has also been cancelled because of poor performance.
Lack of internal control resulting in non-detection of diverting of loan amount for personal or other business. Is such a lapse covered in the internal audit?
I think the core point here is that in case of monitoring of loans, diversion of fund would of course be one of the critical factor which is part of the monitoring of the loans. So in case of basically term loans or demand loans, the initial disbursement of the loan would be very critical and generally is part of the verification exercise which any concurrent auditor or internal auditor would do. And in case of working capital loans like CCOD, this continuous monitoring is very important. And unless until we do it, so when we discuss about frauds, I told you specifically that this diversion of funds is one of the critical factors where frauds are happening in the banking sector, especially in case of advances. So this is one of the very, very critical factors because ultimately the funds have to be diverted for the loss to occur. If the funds are not diverted, it is there in the business, then ultimately the account can slip into NPA, but the bank would be able to recover the funds. It is only when they divert the fund outside the business, outside the area for which the loan was given, that it one results into a fraud also, and secondly it results into a loss to the bank also.
Something that I would also like to add, because this is a very interesting subject, diversion of funds. Recently, we have come across one case where branch has sanctioned a loan of 2 crore 80 lakh rupees CC accounts on the basis of a new firm which was established just 3 months ago. And that person was filing ITR, which was very low amount. And they had mortgaged one property, which was valued, which was the registry amount was just 1 crore 9 lakh rupees. And it was valued by the valuer at 3 crore 50 lakh rupees. So some banks have this kind of policy that for 6 months or for 1 year, the registration amount will be taken into consideration. And regarding the diversion of funds, the CC account was sanctioned. The release of these funds was made into a private limited company account where he was previously the director, and the co-director was a brother of his this borrower. And from that current account, this amount has been transferred to the saving account of the father of this proprietor where that loan has been availed. So this actually, we have to write it down. Of course, the bank has to take the call, but this may be a case of diversion of funds also. So this is what we call.
Another question is, if any account reporting as NPA, then interest on said account is treated as an income or not? If not, then after 1 year, if borrower paid timely EMI, then those interest accrued in NPA period, how can be recognized? Please clarify. Shall I repeat it?
Please.
I think I like to answer that. So basically, what RBI says, in case of NPA accounts, in case an account slips into an NPA category, the income is taken into account on realization basis. This is, I think, their question. So otherwise, the banks would be actually doing it on an accrual basis. But once an account slips into an NPA category, because now there is a risk as to the realization of those funds, so RBI wants, as a matter of prudence, that the income may be recognized on realization basis. Now, whenever that realization would happen, then there would be a board approved policy as to where that realization would first be accrued, whether it be used for repayment of the outstanding principal amount or towards the outstanding interest amount. Of course, there would be some panel interest, etc., which would also have been charged during that period. So based upon that board policy, the realization would be first adjusted towards the principal or the interest as per the policy, and the balance would then be taken to the other account, and similarly the realization would be basically accounted for. I think that was the question. If they want, I don't know. We have answered that.
What they actually, sometimes the questions are not very clear.
Why has automation of critical and key control not been made mandatory by the regulator?
It's a bank policy. Actually, it works. The banking software upgradations works on cost benefit analysis and budgeting. So because of that budget constraints, they are not able to make it a fully automation. And more of the public sector undertaking, they have a fixed cost of employees. So it's a fixed cost of employees versus budget versus how, instead of spending, for every small change, these big software vendors like TCS and Infosys, they give a huge. And we have seen what has happened in the income tax portal. On 4,300 crores has been spent on CPC processes, and its effectiveness is still being felt by many of them. So it works on that budget provisions. So that's the reason why they take that decisions at the board level. But that's the reason why the concurrent auditor has to step in and talk about the preventive and detective controls, and keep flashing these reports to the RBI and all. Of course, the quality of reporting has gone up drastically in the last 2 years because of COVID. A lot of knowledge interaction happened on the web platforms like this, and there's a tremendous, very good reporting. And then RBI is proactively giving so many circulars to set right those things.
So another question is how new frauds are being conducted.
Okay, that's a question.
Actually, we discuss about certain modus operandi where frauds are happening in the banking industry. Of course, as I discussed at that point of time, the frauds typically always, from the beginning, we have seen advances being the one of the most concerned area for banks, because where you have given funds to somebody, then it becomes more of a risky area. And if we see amount wise, still the advances area is the largest area where frauds are happening in the banking sector. Of course, technology now is appearing as one of the major risk areas as to the number of frauds. Of course, the amount being low, but of course, the number of frauds in the technology area is increasing day by day. One of the reasons which I see typically, if you allow me to say so, actually, we are quite used to the idea of having a maybe antivirus program in a computer system. But now we are using our mobile phones practically more than our computer system. So we are using it for internet banking. We are using it for UPI apps like Paytm and Pay. We are using so many things through that mobile, and we do not have any kind of quality check, some controls built into that mobile system. We do not use even an antivirus there. So that is one of the reasons. We have seen cases where mobiles were lost, and suddenly they realize a lot of fraudulent transactions are happening there. So a lot of things are happening which people do not realize, that with the change in technology, they are creating a lot of risk. And that risk is there in their mobile phones, which they are carrying with them. So I think the technology related frauds are one of the newest areas where a lot of frauds are happening. And by the time people realize that the fraud has happened, they have actually lost money and sometimes even confidence in working with the banking system sometimes.
So this is one subject where we can spend hours discussing cases, but I will share just one case. There are small procedures and practices which have been prescribed by their management for the staff, and Premnath ji would be knowing better. But in one branch where we had found out that there is a fraud of around 60 lakh rupees, but thankfully it happened before we started the audit. Otherwise, we would have been blamed for that also. There is a simple process that has to be followed by the staff members that whenever they are leaving the station, workstation, they have to log out or they have to lock the system. So in that particular branch, what was happening is that first of all, the system itself should log out after say 1 or 2 minutes. Yeah. But here in that particular bank, the system was not logging out. It was continuing for say 15, 20, 30 minutes. And there was one staff member. Whenever a staff member left the workstation and did not log it out, he would go, he had the complete detail of inoperative accounts. He will make those accounts operative. There's a maker and checker system. So he will be entering it, converting that inoperative account to operative through his password. And then the checker will be the person who had left the workstation. He made those accounts as from inoperative to operative. And thereafter, after some day, again, he will repeat this process. He will issue RTGS or an EFT or whatever it is to his personal accounts, which are maintained with the other banks, using his password, and then the checker will be the person who had left the workstation. So there are very basic guidelines which the staff members have to follow. If they are not, and then again, voucher verification process is being specified, especially for the concurrent auditors and all that. I mean, this was not done. So this fraud happened for 1 year, 60 lakh rupees fraud was committed by this gentleman. Ultimately, it had to come into picture because somebody came, some depositor. He informed that and all this happened, but this is something which is very small things that has to be followed by the staff members.
There are some questions pending, which we cannot take due to paucity of time. So sorry for it. Now I request CA Gyanchand Mishra sir, Central Council Member, ICI, and Vice Chairman, Internal Audit Standard Board, ICI, for closing remarks and vote of thanks. Over to you, sir.
So thank you, MOC, Madam Diksha.
Yes, sir.
And I'm very much thankful to all the respected legendary speakers in today's program. I can see Akish Bhai, Lukesh ji, Premnath ji. And I'm glad to see that this program is being hosted by Patna branch, very core to my heart. So indeed a great pleasure to me to give vote of thanks to all the members, of course the speakers, and to the chairman of the committee, most importantly, C. H. Ranjot Singh Nanda ji, in his absentia, for arranging such a wonderful program, building an effective internal audit for banking industry. Friends, we all know that banking is basically backbone of any economy, and so is in the case of our country also. We as an auditor are doing our wonderful roles in audit of the banking transactions at large. So onus is on we people is very high. The time has gone when we people were treated only the watchdog. Now the time has come to affix the responsibility. Now with incoming various laws like nuclear, the responsibility has grown manifold. So we can't say in general that this our liability was fixed to this only. After implementation of nuclear, you will witness that the chartered accountants are not only bound to work towards and within the limitations of the financial arena, they have to go beyond that also. So I'm sure that such kind of programs is certainly going to enhance the knowledge and the skill of the members at large. Technology is another forefront which needs to be taken care of very deeply. Because if we don't know the aligned system to work, probably we might not deliver to the expectation of the various stakeholders of the profession. So technology is another part which to be taken care of. I'm sure that all the speakers have taken their due and they have taught the best within the limit of the time. And I'm sure that again the branch will take the initiative and we shall have some more programs on the technology. IASB is coming with some capsule course of the technology in coming time, in which we will try to have the software lessons of the banking industry only. So we'll request all the participants to join that program also. Friends, I will not take much time because this is the dinner time. All family members are waiting to everyone's place. I am also at home of my one friend, a good friend, C. Avinash Gupta ji passed, an IRC chairman. I will request Avinash bhai to say hello to the participants because some members may be from NIRC also and CIRC also.
Thank you. Good evening, friends. My friend Lokesh ji is here. Akhilesh ji is there, all from North only. So sorry for disturbance. So Gyan ji is here for me. At my home, we are discussing some institute matter only. So I just come to know about this program. So this is really very good program on bank and all the speakers, Lokesh bhai and all are wonderful people and wonderful. So I hope everybody must have enjoyed all the session and learnings what have been given by Lokesh bhai and Akhilesh ji and other speakers. So thank you, Gyan bhai.
Thank you, Avinash bhai, for your brief insight about the program. So, without taking much time, I wish you all the best to each and every participant, to the speakers, thankful from the core of my heart, and to the last, to the members of the profession who have spared their valued time for the knowledge upgradation and skill enrichment. Friends, WACOA, World Congress of Accountants, is going to happen in Mumbai from 18th to 21 of November 2022. Though the physical registrations are closed, yet virtual registrations are on. This is lifetime event we people are going to witness. So my request would be kindly do get yourself registered in the event because this event is being hosted by ICI after 118 years of the start of the event. And probably this would be a lifetime event for we people to witness it. About 8,000 physical participants, more than 150 speakers, global level speakers, and more than 10,000 virtual attendees. So this will be the historical event of ICI. So request all the participants to get registered virtually and witness this grand event. So thank you, madam, and thank you. I could not see Madam Pallavi, but I acknowledge her presence because she has been instrumental to give her best for the branch in this term. So I'm thankful to her also for hosting this event in such a wonderful way. So thank you, speakers, Nanda sir, and of course, moderator, participants, and each and everyone, and most importantly, the officers of the institute who do 24/7 to make such event more grand. So thank you. Bye-bye. Good night.
Thank you so much. Good night, everyone. Good night, everyone.
Thank you so much, sir. Good night, everyone.